talk to me about 2026 and the crypto outlook. We were just talking with a guest who likes the technical setup for Bitcoin, but talk to us about institutionalization. We just came off probably the most friendly year for crypto regulation ever, and Bitcoin was in the red. What changes in 2026?
Thanks so much for having me, and Happy New Year. I think you are going to see continued institutional adoption, and I would probably say the biggest thing that we're going to find in the digital asset space is that the technology is actually going to be deployed in more places, in more technologies, in more utilizations that people wouldn't otherwise notice. I think the killer app in the digital asset space, as you correctly noted, is are the stable coins. But increasingly, we're seeing that institutions are actually moving other assets on chain, including stocks, bonds, commodities, and this will only increase utilization and therefore the underlying values of these digital assets.
So talk to us a little bit more about the stablecoin and why exactly that is so big for Bitcoin, and also the institutionalization that we're talking about here.
Yeah. So what we're finding with stablecoins is every stablecoin actually exists on a distributed ledger, on a decentralized ledger. So every time we hear of discussion of a stablecoin, there are a number of underlying blockchains upon which that stablecoin resides in order to validate the transactions. Now, this is important because you will then be able to park your assets in an instrument like a Bitcoin or an Ether, or in the case of DeFi technologies and Valor in one of our exchange traded products, and then move it back into an on-chain instrument and back into the stablecoin space. So it means you have fluidity and fast resolution of assets going from the stablecoin space into yield generating assets and back into the fiat equivalent, which is the stablecoin. And all of these things are using the underlying digital ledgers and blockchains that form the basis of the cryptocurrency industry.
Any other use cases for DeFi that we haven't really seen? I mean, we saw the rise of NFTs 4 years ago. I don't know if they're going to make a comeback, but anything that would really excite the public again that you see coming?
Yeah, I think there are a lot of very interesting use cases. For one, you are looking at a rise of artificial intelligence. But what we also know is that provenance for some data sources has to be proven. And a great way of proving the provenance of data to be used to train an AI model is by actually logging this information onto the blockchain. I think the second killer app or killer utilization use case for digital assets comes with the movement of actual traditional assets into the DeFi space, particularly the ability to settle assets, equities, bonds, trade globally, quickly, and bring additional liquidity into that space. All of these things are made more possible, more flexible by leveraging distributed ledgers in the blockchain space. And that's very, very important. That's an area where our own company, DeFi Technologies, is looking to focus in the coming years.
And talk to us about prediction markets, because some of those are built on the blockchain as well. And we've just seen a tremendous interest in not only prediction markets, but some of the other levered products that are entering the traditional capital markets with leverage ETFs. But strictly speaking, with prediction markets here, how do you see that shaping up in 2026?
Yeah, you raise two excellent points. Prediction markets, I think, are going to continue to grow because they offer a range of solutions that give regular people and investors the ability to access value. But it also, the prediction markets are actually structured in such a way that derivative instruments could be made off of them, and the actual predictive processes can be tokenized they themselves. And it is interesting the point that you make about levered products. We actually launched two of our bull two-time levered products under velour ETPs this month. We are going to find now that digital assets have become more broadly accepted, there'll be more interesting structured instruments that could be made to fit a broader range of investor profiles. So I think both prediction markets and more interesting targeted structured instruments will be things that you will start to see. And people will be finding that they're going to be including these things into their regular portfolios to be able to create targeted return profiles.
Anything we didn't get to here, big predictions for 2026?
I think the biggest prediction for 2026 will be seeing that regular people, regular corporations that are not necessarily crypto native are going to have an easier means of accessing these instruments. It won't be a particularly interesting or unique thing to be able to invest in these assets. It will become an expectation. And then the other thing is that the on rails and on ramps for accessing these digital assets will become merged with traditional assets.
All right, I try not to get involved when Bitcoin is going sideways. This has been going sideways for 6 weeks, but some technical developments have happened. And you tell me, is it time to go long finally?
Well, we were just talking before that you astutely pointed out there was a big options expiration on Friday. And before that, most of the dealer community was basically long optionality, and they were their hedging activity was helping to kind of pin Bitcoin into where it's resided in the sort of the high 80s for the last couple of weeks. It's been kind of a numbing and confounding market, right, since this liquidity event that the market had on October 10th.
Big sell-off, yeah.
Right, big sell-off and big liquidity event that kind of really spooked the market pretty good and drew out a lot of the fast money into other places, has given us basically a heartbreak quarter, which has ended a year where a lot of the slow money progress in integration and legislation and building in M&A has been great, but the fast money seems to have evacuated from the token space. So I guess the best way to put it is I think Bitcoin and the rest of the crypto market, its attention span seems to be a quarter. Things happen in quarters. We've had almost exactly a solid quarter of downtrend, so this too shall pass.
Yeah, I like that because guess what? It's the end of the quarter.
It is.
And I think the first quarter has been a pretty good time. The beginning of the first quarter has been a pretty good time to buy Bitcoin. And if we go to the Wi-Fi Interactive, I'm just going to show a chart real quickly because I was mentioning to you also, I like the technicals. Here's the year to date in Bitcoin. And we got a pretty steep trend line, and you got to be careful about these sometimes, but we have just crossed over that. So you gently step over that. I would point out here, 75,000 is the low of the year. I'm going to put a 2-year chart. That was a year to date. And so here's that same level I just highlighted, 75,000. It was also the peak the prior year. So kind of a line in the sand for a lot of investors. Where do you see the money coming into Bitcoin? The ETF, I keep hearing all these new companies finally onboarding Bitcoin onto their platforms. Anything there?
I think the bullish case for Bitcoin is that its investment thesis is intact. I think what's happening a lot with other tokens, right, with everything from Ethereum all the way down is people are starting to scratch their heads and say, I get that there's going to be more adoption of blockchain technology, but what does this token have to do with it? How do I relate those two things into an investment thesis that gets me in for the long term? Bitcoin on its own, it's fine. Store value, it moves from one place to another. It has a very simple purpose. And therefore, people who want to invest for the long term can kind of count on that. The precious metals have taken away a lot of the fire in terms of the debasement trade, but there are a lot of technical reasons and geopolitical reasons that are driving those movements as well. So I think you point out some really interesting levels of that $75,000 level, which was due to some flush outs of perps back during the taper tantrum back in Q1 of last year, right? That was kind of a region where we haven't had a lot of price discovery. Remember, after the election in 2024, Bitcoin raced from about 69,000, pretty very close
quickly.
Very quickly, right? So there wasn't a lot of kind of price discovery and kind of settlement there. Things just raced up. So that's a tender area, that sort of $85,000 to $75,000 level. We've held on to 85 pretty well. We've seen, as you pointed out overnight, whether it's been MicroStrategy buying or option dealers being short gamma, that the race up to 90 can be pretty fast. And then we'll have to see where things go from there. We don't have a lot of the baggage that we did in the first quarter of 2025 with the inauguration and then with an immediate tariff policy. Things seem a little smoother with a little bit more precise expectations for the Fed. So if things roll out pretty slowly and a trend begins to develop, I think investors can start to watch that and make their decisions there.
Another thing I remember from the beginning of last year, there was, as soon as Bitcoin made that humongous rally into the inauguration, and it stopped shortly thereafter, I heard $200,000, $300,000 price targets. Those were coming out pretty quickly. And we had probably, arguably, the most favorable regulatory backdrop for crypto in a long time, if not ever. Without those tailwinds, though, I mean, what has to happen? What's the catalyst that gets Bitcoin to 200?
Great. It's a great question. And I think the answer is not in Bitcoin. The answer, and what ended up happening a month later, was that Ether found a bottom and had its massive, very powerful rally. Ether was the poster child, was the the representation of blockchain technology, stablecoins, tokenization, payments, things like that being adopted, and that led a massive rally which had breadth. Bitcoin needs breadth.
Yes.
Breadth needs Ether. Ether will lead the way of the adoption and technology names. High quality names will benefit more than low quality names. So I think ETH is a very, very important name to watch. It's starting out the year or ending the year around 3,000. The high was around, a little bit short of 5,000. So keep an eye on ETH for the adoption of blockchain technology representing itself into investments into tokens outside of Bitcoin.
Yeah, I'm so glad you mentioned breadth, because I'm a big breadth guy when it comes to stocks, but it also applies to crypto. Yep. I'm going to get you out on this. Anything we haven't covered here or outlook for 2026? I'll give you the floor.
Yep. We have an index called the CoinDesk 20, which is now around 3,000, like ETH. It started out around 1,000 in the fall of 2022 when we based it. There's a mid-cap index called the CoinDesk 80. It's based the same way. Yeah. It's under 500, right? So we're really seeing a pull away of high-quality names and important critical names versus low-quality names. Get some diversification, get some breadth. An ETH-led rally will bring a lot of other names with it. Bitcoin will handle itself, and just go for some breadth in 2026.
All right, breadth in 2026. Love it. Andy, thank you for stopping by here. Great to see you.
Good to see you.
I have the chances of serious crypto legislation going through us slim and none, frankly. I've been telling markets for years that the idea that the Trump administration was going to come in on the heels of the scandals of the past few years, and that slim margins in the Republican Congress were going to drive through major crypto legislation was a fantasy. And looking beyond all that, the exception of the stablecoin legislation, there is no coherence around policy at all. You need bipartisanship, but you also need policy coherence in order to figure out where things are going. There isn't any right now. There isn't likely to be. The footnote to this too is, frankly, there's a lot of disquiet in Washington, some above the surface, some below, about the Trump family involvement in crypto. I don't make any case for it one way or the other. My point being that Congress people, particularly in election years, tend to shy away from anything that looks controversial. And crypto now has always been controversial, but now it looks a little bit more controversial than it had been, thanks to all that. They don't want any part of that.
Welcome to Stocks in Translation, Yahoo Finance's video podcast that cuts through the market mayhem, the noisy numbers, and the hyperbole to give you the information you need to make the right trade for your portfolio. I'm Jared Blickery, your host, and with me is Yahoo Finance senior reporter Ali Canal, who's here to connect the dots and to be that bridge between Wall Street and Main Street. With the big Bitcoin washout recently, we're going to be digging into all things crypto with a special guest. In our phrase of the day, on-chain, because this cycle isn't just about prices, it's about what companies and investors are actually doing on the blockchain in real time. And for market show and tell, we're going to be tracking Bitcoin's RSI, or Relative Strength Index, which just swung from too hot to too cold. A clean way to see who's buying the dips and who is tapping out. And this episode is brought to you by the number 5%. That is our guest call for where unemployment could land in 2026, especially for younger workers navigating the AI job shakeup. And today we are welcoming back Zach Guzman, who is the founder of the Web3 media startup Trustless Media and host of Coinage, a community-owned crypto show built around on-chain governance. Perfect. He is a former Yahoo Finance anchor and longtime crypto reporter, and he's been early and loud on how digital assets, tokenization, and community ownership are reshaping finance and media. So, Zach, we got to start with the elephant in the room. Big crypto sell-off here.
Yes.
You buying the dips, or are you thinking, oh, another crypto winter?
Nah, I mean, this one's a little bit different, I think, than structurally some of the other crypto winters we've seen in the past. So first off, it's good to be back on Stocks and Translation. Jared and Allie, good to see you again. But I think vibes-wise, obviously, there are always tremors. I think this year's been a very long year for crypto. We started the year with the Trump meme coin and all the excitement around, oh, wow, we got a president who understands this stuff, to, hey, wait, does he really understand this stuff, to where we are now. And I think, we're seeing some of the fears trickle in around strategy and what Michael Saylor has been up to in building Bitcoin treasury companies and the copycats and the like. But generally, I think I would be buying this dip, Jared, if I can give you a real succinct answer.
Yeah.
I think some of these fears are a little overblown, as we'll get into today, but I think we're finding some footing here.
What do you think is contributing to the drop in sentiment? And we heard Michael Burry, a famed Big Short investor, he said that Bitcoin is essentially worthless. So what's your response to his comments and really how that's contributing to the overall retail sentiment right now?
Yeah, I mean, I think we've heard, obviously, what is this? For me, I think it's like my fourth cycle. Jared, I know you've been focusing in on crypto for a long time too. We've seen a lot of people say Bitcoin's worthless when it was $400, when it was $1,000.
Even Jamie Dimon at one point.
Exactly, and look at what's happening now.
Wall Street across the board seems to be embracing.
Exactly, and so you can take certain, skeptics out there and you can try and focus on what they're saying. But generally what we're seeing is that trend, Allie, is more and more Wall Street giants. Vanguard, for example, just coming out, huge 180, saying that they never wanted their clients to get involved with this stuff, now offering access to Bitcoin ETFs, Ethereum ETFs, Solana, and Ripple. So I think we're seeing a huge kind of shift in that take being more of a minority than the majority.
All right, now time for our phrase of the day, which is related to all of this stuff, on-chain. And this one matters because more of the crypto story is now unfolding in public right on the blockchain. When something is on-chain, it means the activity is recorded directly on a blockchain, a transparent permanent ledger that shows money flows, ownership changes, and network usage in real time. Think of it as moving from back-office bookkeeping to a glass-walled showroom. And in this cycle, what companies and investors are doing on-chain is becoming just as important as the price charts themselves. So, Zach, you've been pretty vocal about that, especially around Coinbase's recent moves. So what are your thoughts broadly on the on-chain?
Yeah, I think obviously, Coinbase is a giant in the space. If you look at the stock, it's been pretty flat this year relative to some other players. I think we can get into the comparisons to Robinhood.
Hood.
Which is up drastically on the year. What is it? More than 250%, I think.
Like that.
So, I think right now, Coinbase is making this huge shift to really leaning into not just being a crypto exchange, but doing all of these things on their own Ethereum layer 2 on Base. They also made a big shift themselves, so it's not just Vanguard, but even within the on-chain space, Coinbase had for a very long time said they were going to launch a token for Base. And just a few months ago, they also had their big about face in saying that they might. So I think right now, a lot of people are overlooking what that means for Coinbase, what it means for a company like that that can start to make fees off of their own chain. So if I look at the comparison to Hood and Coin right now, I see a huge kind of misunderstanding of what's happening with what Coinbase wants to do in not just being an exchange, not just being the custodian for a lot of these Bitcoin ETFs, but now really doubling down on what they can power on-chain, whether it's prediction markets, whether it's on-chain equities, all kinds of different things in the tokenization world, including what we're doing at Trustless, which is kind of tokenizing the upside in creators. And so I think we're kind of just at the beginning of this chapter of what can be built on-chain.
Talk to us about what you're doing at Trustless Media. I find this fascinating because I think you're leading the way here, and maybe this is a model for the future, but just try to tell us how you've embraced the crypto world and a lot of these technologies that we're talking about here.
Yeah, I think, just to stick with Coinbase, Zora is one of those projects that has offered basically a launch pad for people to launch their own tokens and tie it to a Web3 version of Instagram so people can post content, people can trade content all on chain. And there are questions about how sustainable all of that is when it's not tied to anything real. But for what we're trying to do is, legally tying the upside in a creator, so someone who might be on the rise, maybe they're not an A-list celebrity that Allie's going to be covering on Yahoo, but they might be kind of an earlier on TikTok creator, And you might see talent there. And so what we've basically pioneered is the idea of buying into an up-and-coming creator, or what we've done at Coinage, letting anyone buy a share in a community-owned media outlet and grow with it over time and earn dividends from it. And so I think there's a lot, once you start to power sustainable dynamics like that are a little bit more realistic, shall we say, than just the meme coins that came in the past. And so there are a lot of different experiments. What we're doing is just one, Zora's is another. And from what I've seen, Coinbase is really trying to figure out which one of those are going to be around in the long term and doubling down on those.
As we all are.
Yeah, and I think that speaks to just a community aspect overall in the crypto space. Like the crypto community, I feel like, is strong and fierce. But we were just talking about, a phrase of the day, on-chain. Then there's blockchain, stable coins, tokenization. There's all these buzzwords within this space, and it can be a little overwhelming for someone that maybe doesn't know crypto that much, hasn't been following it for as long as you.
Yeah.
What would you tell people that maybe are curious about crypto because it's becoming more part of mainstream media, more part of the Wall Street vernacular, that maybe don't fully understand it yet?
For sure. I mean, I think, just look at the last 3 years, right? It had gone from, people
Almost
only
full wipeout.
Yeah, I mean, the FTX collapse obviously was its own thing, but the idea of kind of where Wall Street has gone beyond just kind of like investing in the story of digital gold, which is all Bitcoin kind of has kind of elbowed out its own little narrative. But now, as we're seeing kind of real world assets, tokenization, as you're talking about, I think the whole industry and Wall Street as well is asking, all right, where is the real opportunity here? Is it going to be in simply tokenizing existing stocks, which may be lucrative for some people, but for the average investor watching this show, it might not be any different for them because they can already trade stocks if you're here in the US. So I think really now we've kind of evolved into a new chapter, so to speak, where I'm excited about assets that couldn't have existed before without a blockchain, like the glass showroom you just mentioned, Ali, is now you can kind of issue tokenized things individually. You don't need to go the full IPO route anymore. And that's what we're seeing work through DC, the rules and regulations around what that looks like. If you're not going to go through kind of an SEC registered listing anymore, if what we're doing in co-ops is now allowed too, what does that enable? Suddenly any business can kind of start to offer some upside in what they're building and lean into the network effects and community that you just mentioned. So I'm excited about where kind of that wake-up call when it happens, because I think we're still very early in that. And that's why I think, whether it's a Coinbase layer 2 or wherever all these assets eventually trade, there is still huge upside there to be discussed.
All right, hard pivot here. We got to talk market technicals because it is time for market show and tell. And we are breaking down the Relative Strength Index, or RSI, one of the simplest ways to see if an asset looks overbought or oversold. RSI tracks the speed of recent price moves, and when it pushes above the 70 level, traders say things are getting a little bit too hot. And below 30, it's a sign that the selling may have gone too far. So Bitcoin's RSI just made a full swing from overheated levels earlier this fall to flirting with oversold territory as the latest pullback shook out the fast money. So that kind of snapback tells you a lot about who's buying the dips, who's backing away, how fragile the sentiment is beneath the surface. So what do you see in Bitcoin's momentum right now in the RSI?
Yeah, I mean, RSI is a good part. First of all, I like the structure of the show, I got to say, in terms of digging into the explainers here, because I think RSI is a good metric. The other one, too, is the fear gauge, somewhat similarly related. And we just hit, I think, a low on the year just a couple weeks ago in terms of extreme fear right now. And I think when you weigh in why that's happening, obviously, sometimes the catalysts that got us to the record highs of about 125, those evaporating obviously are going to swing back to the downside, which is why we saw about a 25% decline since the beginning of October. But I think we're finding our footing here to the point of the RSI reading. I think we're finally in that territory of those fears being overblown around strategy and some of the sell-off. So I would say this is why I'm optimistic and bullish here as we've kind of seen that pullback. It's not different historically than what we've seen in the past too. Even in a bull market, you can start to see some pullbacks like these. 25%, honestly, kind of modest by Bitcoin's historical measures. And if you're seeing a reading like this where things are overblown, I think it's healthy to start making some bids here.
I got one more question before we go to break. Got about a minute here. Just thinking big picture, and this isn't on technicals. We came into this year and found out we have a very friendly crypto administration, which was a surprise. But Bitcoin, the gains this year were quite a bit less than I would have expected, given the backdrop. You just mentioned that Vanguard is now changing its colors, its stripes, allowing crypto onto its platform. So when do we get that big rush up where we talk 2x, 3x, 4x in a year?
Obviously a year is just 1 year. If you back up and look at the picture, we're up still pretty considerably since that last collapse we were all talking about in 2022 when Bitcoin was just 16,000. So if you zoom out, still kind of in the same trajectory of, look, this is still an asset class.
Question of
growing.
timeframes here.
Question of timeframes, I'd say. I'd say we zoom out when we're looking at a chart like that. But still, Jared, there's still a lot more excitement now that Vanguard is flipping that switch.
We need to take a short break, but coming up, we're talking Zach's unemployment forecast for 2026, plus a runway showdown to determine if gold will topple Bitcoin next year. Stay tuned. Well, this episode is brought to you by the number 5%. That's Zach's call for where U.S. unemployment could land in 2026. So, Zach, you're zeroing in on that stress for new grads. And we've heard that it is harder and harder for college-educated young workers to nab that first job. And there's been talk that maybe that's AI, maybe it's something else going on. So why the 5% call?
Yeah, sometimes people forget. I'm not just a crypto guy anymore, right? Yeah,
You're an economist.
Yeah, we forgot what we used to do here at Yahoo. But
Many
no,
hats.
I think in general we're seeing kind of the early pieces of this, right? And it might just be anecdotal right now, but I think in general, the earlier workers in their life cycle, their employment journey, are generally getting replaced first by all of this. And I think if you look at the data and just look back a year ago and the spread between people who were under 25, the unemployment rate there, versus everyone above that age, spread was only about 4%. Now it's up to 6, just comparing that on a year-over-year basis. So I think we're seeing the early innings of that. We've even heard, I think Fed Chair Powell kind of get asked about this by Brian Chung, former coworker of ours too.
Finance anchor.
So I think it really is just kind of like the early innings of, I think, seeing some of that play out, which worries me because, again, you can hold me to 5% next year. I don't know how realistic any of the government data, not getting too political here, but I think it is something that is worrying a lot of people because that is a very vulnerable workforce. We see it time and time again when things start to turn. It's the younger employees, it's the minorities, and the unemployment rates that we see kind of spike first. So it's just something to keep an eye on, I think, as we move forward.
And it's a ripple effect, too, when we think about the affordability crisis and how a lot of people out there can't afford homes. And what is the long-term impact of that if you have home ownership that declines significantly and the American dream is essentially gone? I mean, it's one of the reasons why President Trump was elected, because of the affordability crisis. You can argue that's why Zohran Mamdani was elected here in New York City, the first socialist mayor. So there's a lot of different forces at play when we talk about the economy.
Yeah, and we just put out a piece on that too in terms of looking at kind of why a lot of people, myself included, got excited about crypto and community ownership and putting this on chain. And a lot of what both Trump and Mamdani talked about is kind of if you feel like you're being left behind by the normal economy, what else is there? Alternative assets were kind of the escape chute, the life raft for a lot of people who felt excluded. And so I think it is a very interesting thing to see crypto somewhat co-opted now by Wall Street, and now maybe that doesn't exist for younger people.
Nevertheless, I've read your words here in your notes here that you do believe that crypto asset prices are somewhat tied to Fed interest rate expectations, and that just means that there's been this tremendous Wall Streetization, if that is a word. It's gone mainstream, and so we see crypto assets responding to the same thing that stocks do. Tell us about that relationship right there and how you see it.
Yeah, I mean, it's still historically true that Bitcoin is generally an interest rate sensitive asset, right? And so if it is true, and we just saw this kind of play out over the last few months, and why Bitcoin did start to fall off was that the expectations for a December rate cut fell off a cliff. And you would have expected, as those kind of came back up to around 90%, that you would have seen Bitcoin rally. It didn't, which to me, I think, points to the overhang with strategy and the fears there kind of still being what is the catalyst for the persistent sell-off. But I think moving forward, as we get back to kind of the interest rate discussion past whatever the Fed chooses to do in December and look ahead to next year, we saw JP Morgan kind of also flip-flop on whether or not there'd be a cut. And I think looking ahead to 2026, if Kevin Hassett's the guy, if Trump's putting him in lower rates, continued, generally a positive catalyst for Bitcoin there too. So I think structurally, people might not want to believe it. We've seen predictions for Kevin being the guy come up. Huge over the last couple of weeks on all the betting prediction markets.
Poly market right here on Yahoo Finance, yes.
Yeah, so I think, if you put those pieces together, generally looking forward into next year, people might still be underweighting exactly what's coming on the interest rate side.
Talking about prediction markets, we've been hearing a lot more talk about the future here, and we were just talking about poly market. There's Kalshi, and Coinbase might be launching its own prediction market. Do you think there's any dangers within the rise of prediction markets?
Ethically,
No, just systemic.
I think, it is interesting to think about turning everything into a market, right? And we've covered this at Coinedge too, the idea of tokenizing everything, financialization of everything. Does it lead to negative societal outcomes? If you think about Facebook back when their IPO was, and
Nobody was asking that question.
Nobody did. And nobody really thought about it, what it would mean if we were online all the time, right? And now think about what people are saying about shifting and getting rid of iPhones to now have dumb phones because of the impacts that we feel. So I think it's kind of a similar thing where it's people aren't asking enough of those questions. However, I would say there's still a lot of money to be made, just as it was true when Facebook was launching, that we're very early in that. And so I'm in the camp that maybe Kalshi and Polymarket might not have as huge of a competitive moat as people think, which is why it's very interesting to think about Coinbase leveraging the distribution power that they have, and right now kind of working with Kalshi and getting their own markets off the ground. But I think increasingly, if you're the behemoth like Coinbase and you have all the users yourself, to me, it would seem like they've got a huge announcement coming up mid-December. I'm going to be very interested to see kind of what they say about the partnership there and what their plans might be to move some of that onto Base and their own chain.
Yeah, I think a lot of people would be interested in that announcement. Got to do another hard pivot because we've got a markets take on a classic Hollywood gab show staple. Who wore better? And today's runway showdown is a battle of the havens, the timeless yellow metal versus the digital upstart trying to catch the lead. On the left catwalk, we've got gold, the veteran-style icon, walking with a polished old-world look. It's been setting the tone all year, hitting record highs and showing the kind of seasoned confidence that often leads the rest of the market. On the right catwalk, we've got Bitcoin, the flashier, high beta trendsetter, cutting a futuristic silhouette with bold lines and a faster stride. It may trade with more drama, but it hasn't produced the returns anything like those of the barbarous relic this year so far. So, Zach, the question for you is, looking ahead to 2026, who's really the haven trade here? Is it the classic gold standard or the digital model chasing it down the runway?
Yeah, it's a good question. I think in general, what we've seen historically is gold is usually kind of the precursor to what happens with Bitcoin, right? So usually you see kind of gold lead the charge and Bitcoin kind of catch up over the ensuing months, call it 3 months, generally has been the lag. And so if you consider how strong of a year we've seen with gold up more than 50% this year, and Bitcoin essentially kind of, certainly not there. I think if you fast forward to 26, maybe that would be the time. Generally right now, which is why I've said what I've said on this podcast here today, is that I would be more in the bullish camp because historically, you'd expect to see Bitcoin have a stronger follow-on.
Want to ask you about strategy because MSTR, that is a big overhang for the market. How do you think this plays out in 2026?
Yeah, I mean, Julie just walked by. She's been chatting with Michael Saylor
a
few
few
times.
true.
I always like watching her interviews and just had Fong on. So I think in general, people, again, are waking up to everything you just said in comparing gold to digital gold and what Bitcoin can start to unlock, whether it is kind of on-chain lending, which we're seeing a huge boom in right now, and also cross-border payments, which is also interesting when you start to think about some of the things that strategy could get into. And so in general, I do think we're still extremely early in recovering from some of those fears. When I left Yahoo Finance in 22, it was right around the time of the Terra collapse. The Terra collapse was huge. And again, similar dynamics at play in terms of death loops and people thinking about leverage and what happens if you have a huge move to the upside caused by strategy. Could you have a huge move to the downside? I think a lot of that's overblown, just kind of generally what I know about strategy. And it's been interesting to see people kind of dig into how it works. But in general, I think we're seeing that right now is people moving beyond those fears and optimistic that that's going to continue.
In 2022, it wasn't just Bitcoin that was pummeled. It was also the tech industry at large, big tech.
Yeah, big bear market in stocks.
Exactly. And how do you view crypto at this stage of the game? Is it still trading in lockstep with tech? Is it risk on? Is it risk off? How do you view?
Yeah, I think we're seeing a huge bifurcation in the Bitcoin story. And even the Bitcoin story, as we said, is kind of like this hedge against inflation and trading in lockstep with gold. generally, you can poke holes in that one all the time.
Yes.
But we're seeing a huge kind of break now. And Kathy Wood was just talking about this too, in terms of why she actually dropped her Bitcoin forecast because stablecoins have taken off. And so we're kind of seeing investors wake up to, all right, again, where's the opportunity here if, stablecoins are going to be a thing, if tokenization and moving things on chain is going to be a thing, if Bitcoin's going to be its own thing over here and then everything else in crypto, like where do those opportunities, the investing opportunities start to kind of pop up? And I would say that generally the best name that's positioned to capture most of that is Coinbase. And it's still crazy to think that the stock is below where it IPO'd, but that is still what we're seeing here. And I think as some of the retail excitement, to Ali's point, kind of dries up because other things in crypto, again, that bifurcation happens, maybe that's not going to come back. But everything else that they're betting on, I think, is still has a lot of potential.
And real quickly here, Zach, Bank of America just came out saying that they recommend 1% to 4% allocation to crypto. What are your thoughts on that and sort of the Wall Street firms making these calls?
Yeah, I mean, I think obviously, again, let's just step back and think about what that sounds like when you have a name like that recommending anything. It wasn't too long ago that everyone would have been sitting at this table saying Bitcoin's a scam, right? And we're still hearing that from a lot of smart people. So I think you do need to appreciate how far we've come when we hear something like that. I think my general advice, which is always dangerous to give, is that it very much depends on kind of what your investment goals are. If you're a younger investor out there, you've got a longer time horizon, you really can be in the HODL camp. If you're trying to be more of why Saylor and why even Kathy Wood, Tom Lee, these big names like this asset, is because increasingly, I think, we'll see it break from the correlation to everything else, and having a little bit of that upside is helpful to a portfolio.
Thank you for that. Great to see you again, Zach. And real quick here, on-chain. I think we broke that down pretty well. The big question on everybody's mind, what happens to Bitcoin here? Is it the buy the dip time, or is it that crypto winter? And my 2 cents here, you got to watch 75,000. If that cracks in a meaningful way in Bitcoin, then we might have that crypto winter. Until then, well, guess what? I think it's time to sign off. So we'll just do that. We are winding things down here at Stocks in Translation, and we'll see you next time.
Ines, I want to go to you on that roller coaster that we have seen for crypto this year. And to be clear, it's not unusual for Bitcoin, right, to see a roller coaster. What was perhaps unexpected is that it would have such institutional and policy support and still see that roller coaster, Ines.
100%. I mean, the Bitcoin community got everything that it wanted this year as far as regulation, as far as a friendly SEC, as far as the administration really going forward with crypto and Bitcoin in general. And yet you are seeing prices that tumbled from the 126,000 level in October, and also calling into question, is the 4-year cycle really over or not? I mean, you had some very prominent voices that were talking about that 4-year cycle being over, but now we are in a crypto winter, so to speak. And what's been sobering are some of the also price targets that have come out from Wall Street, because you had a lot of bullishness going into the end of this year, and now you're looking for next year some sobering calls. I mean, you've got Sean Farrell from Fundstrat that basically is saying that you are going to probably be seeing a drawdown in the first half of the year, and calling for 60 to 65,000 for Bitcoin in the first half, and then you would see a rally going into the end of next year, and Bitcoin reaching 115,000. Now, he says this is for a variety of reasons, but nevertheless, I mean, he got quite a lot of pushback online because of that, because he's been a big bull. But we have seen sort of a changing narrative. I don't think that it was helpful that you saw OGs, whales, selling heavily into this drawdown that we've seen with Bitcoin. That has created quite a bit of negative sentiment for the overall crypto industry.
Michael, so good to see you right off the jump here. Look, we had Bitcoin hit a record high just a few weeks ago, $126,000. We've seen this pullback here over the past few weeks. I look at strategy stock down about 27% over the past month. Are investors losing faith in the Bitcoin movement?
No, I don't think they're losing faith. If you're an investor, it really comes down to what your time horizon is and how much volatility can you stomach. So if you want max performance, you're going to take max volatility. Strategies up 75% a year on average for the last 5 years. So you can actually outperform Bitcoin if you buy an equity that's amplified like MSTR. If you don't want to trust anybody, you want no counterparty risk, you buy Bitcoin. Bitcoin's up 50% a year over 5 years. No counterparty risk. It's very straightforward. If you want to have your cake and eat it too, you could buy some convertible preferred like STRK. STRK will get the vol. The vol on MSTR is like 60, 70. The vol on Bitcoin is 45. STRK would get your vol to like high 20s. And you get a mixture of a dividend and principal protection and some of the upside of the common equity. And if your time horizon is less than 4 years and you don't have much volatility to stomach, you shouldn't buy the equity or the equity hybrids. You should buy the credit, something like STRC. STRC is meant to be very, very stable, around $100 plus or minus a few pennies. And you get like a 10 and 10.5% dividend, that's tax deferred, and you're getting the benefit of the crypto economy, but you're not on the volatility roller coaster. So everybody's got different risk tolerance. They've all got different pools of capital. The good news this year is now you've got a variety of different instruments you can use to ride the digital wave.
Michael, and as we've gotten more instruments to ride the digital wave, particularly as people have had more and more ways to directly invest in Bitcoin, strategy stock has not done as well. To your point, it has over the past several years. But again, if you're talking about getting in now, or if you got in earlier this year, you wrote it down even as Bitcoin was going up. Are you concerned at all that the crypto treasury, the digital asset treasury strategy that you pioneered is losing a little bit of steam?
Over the last year, there's been 100 companies that have added Bitcoin to their balance sheet. The derivatives market and IBIT has surged. The flows into the ETFs have surged. All the major banks have announced support. The accounting has dramatically improved. The tax regime has improved. The administration support at the SEC, the CFTC, the Treasury level has improved. And so, and the technology has improved. Companies like Block have rolled out support for Bitcoin on Square and Cash App. So all the fundamentals are good. If you're going to be an equity investor, you have to think for yourself, and you have to have a time horizon of 4 years or longer. And equity markets are either going to lead or lag, and occasionally they'll perfectly reflect reality, but generally it's only a few days a year when they'll be perfectly rational. So if you don't have that 4-year time horizon, and if you don't want to make decisions based on fundamentals, if you simply want to park your money in a stable instrument and pick up a stable yield, you should be a credit investor. You shouldn't be an equity investor. I think the irony is the fundamentals of the industry are so much better today than they were 12 months ago that you've now got an extraordinary risk-reward opportunity. Now is a much better time to invest. You know all the things that you wanted to happen have happened. The market sentiment is negative, but that's an opportunity for the equity investor that makes their own decisions.
Michael, you're seen as a pioneer in this industry, charting new territory in cryptos and Bitcoin. What do you think about the likes of a Jim Chanos and others like him that are trying to profit off of you not doing so well?
I don't really think about Jim Chanos. I think that there'll be some skeptics. They don't really appreciate what Bitcoin is doing. They don't understand digital capital. They don't understand digital credit. But at the end of the day, the big dynamic in the industry is digital capital has gone from nothing to $2.5 trillion over 15 years. Digital credit didn't exist 12 months ago. We've issued nearly $8 billion of digital credit. Digital credit has got a tax equivalent yield of 4 times higher than bank credit. You can have a bank account, in New York City that pays you 4% and it's taxable, or you could buy something like STRC that pays you 10.5% that's tax deferred. So the market's evolving, and the short sellers aren't really interested in the impact of AI or the impact on digital assets to change the way the world works. They're just interested in being skeptical as a business. I don't really focus on them. Nothing great has ever been created by a short seller.
Michael, you've referred a couple times to this new digital asset credit that you guys have developed, STRC Stretch. It's a preferred security that, as you mentioned, pays out 10.5% in yield. And this is also a way for you all to not necessarily issue more stock in the underlying equity in order to pay for buying more Bitcoin, and therefore maybe not diluting those underlying shares as much. But how far do you think you can take that as sort of a funding mechanism for your Bitcoin strategy?
Well, I think the money market industry is massive. There's $30 trillion worth of assets invested in treasury-type instruments in the United States. Stretch is about 1% of 1% of that industry. It's about a $3 billion issuance. And the big idea here is you take an asset appreciating 50% a year with a volatility in the mid-40s, and you strip the volatility from 45 down to below 5, maybe to 2, 3, or 4, or even 1, and then you extract about 10% dividend yield. And if you do that, you end up with something which is yielding 6% more than the risk-free rate. And when the vol gets to 1, you've got a Sharpe ratio of 6. So we're really engaging in financial engineering to distill pure currency yield above the risk-free rate. And of course, the common stock shareholders in MSTR get the difference between the 10% that we pay and the 50% that Bitcoin's been performing. Long term, the math is pretty simple. We expect Bitcoin to appreciate about 30% a year for the next 20 years. We expect to pay about 10% dividend yield on the preferreds. 2/3 of the benefit go to the common equity shareholders, and most of the volatility is stomached by the common equity shareholders and the corporation. And the credit investors get this pure 10% return of capital dividend. That means it's tax deferred. They don't have to pay tax on it until they sell the underlying instrument. And that means that they're able to invest in a credit instrument that pays them a 10% dividend instead of holding a money market that pays them 4% in a taxable coupon.
Michael, of course, we're having this conversation the day after the government shutdown officially has ended. Things have to restart up again, but still record-setting shutdown. What did you think about the length of the shutdown, and do you believe it reinforces your long-term view on Bitcoin and various other cryptos? Because look, at the end of the day, record-setting shutdown, I mean, how can you have trust in the dollar?
Well, you know, we joke there's no tariffs on Bitcoin. Bitcoin has no employees. It's got no corporate headquarters. It is an index reflecting the digital economy or the global digital economy. So if you just like to buy 1/21 millionth of the global free market, then you buy 1 Bitcoin. As people lose confidence in a currency in Africa or South America or Asia, as they lose confidence in a government, if they think that their favorite company might make a mistake, war, famine, pestilence, fire, flood, uncertainty, acts of God, all of these things are risk factors, and they're all risk factors that Bitcoin doesn't undergo and doesn't experience. So as people get educated, I think they can see the appeal of buying digital capital instead of investing their money in equity capital or real estate capital or fiat capital or corporate credit capital instruments. And so this is all a teaching moment, but I think that every single month that goes by, more and more people start to appreciate the benefit of owning 1/21 millionth of all the money in the world forever.
Michael, do you think, in light of the shutdown, that investors have lost faith in our country?
No, I don't think they've lost faith in our country. I think the country's going to do just fine. This is a hiccup. It's It's not our finest moment, but right now, the exciting things that are going on are digital intelligence, digital assets, digital capital, digital credit. It's pretty clear that money's going to move at the speed of light. It's pretty clear that a billion AIs are going to think a billion times faster than us human beings. You can see a world where a billion robots are going to build everything we need, where the cars are going to drive themselves, where the products are going to figure stuff out for us. So we're moving toward an intelligent world that is millions of times more efficient and more empowering. So in a world where a billion robots do everything I want before I think to ask for the thing, I don't know how I won't be better off.
Michael, is there a risk that some of those robots or perhaps quantum computers combined with generative AI, that they crack Bitcoin, or that they think of something better than Bitcoin and it becomes obsolete?
No, I don't think there is a risk. I think that technology will improve and hardware will improve, and at some point, if the hardware gets more powerful, we'll have to upgrade the software that protects our system. So just like you can expect your bank to upgrade their software, and you can expect to upgrade your Apple software and your Google software and your Microsoft software, and you can expect to upgrade your hardware devices. I'm on the iPhone 17 Pro Max right now. You'll upgrade your computer. Bitcoin is a protocol, but it runs on hardware and software nodes all around the world. The hardware is being upgraded every few months. The software is being upgraded annually. And so the software and hardware that runs the Bitcoin protocol is going to get upgraded just like your Apple and Android and Microsoft software will get upgraded.
I was going to say Tim Cook's sending you a check in the mail, but I guess now Microsoft and Alphabet have got to send you a check too, because you mentioned all of those. Let's talk a little bit about the bigger market because of the AI advances that you're talking about. You know, you're very familiar with the dot-com bubble, right? Because you founded MicroStrategy in '89, you went public in '98. I was looking at the history of the stock chart here. You went public at $12 a share. The stock at that time spiked as high as $313 in 2000. And then crashed down or remained below 20 until you initiated your Bitcoin buying strategy. I'm curious, you know, as you look back at that crash, what that taught you and whether you see any parallels today. Obviously, you're aware of the big bubble debate going on right now.
I think it teaches you to focus. Don't overextend. You might have 10 good ideas, but you're better to focus upon your one idea and to commercialize the one idea. It also just reminds you that no matter where you are as a corporation, you can always improve the company's outlook, and you can improve and create shareholder value by harnessing the next wave. People wrote off Apple for dead. I mean, Michael Dell famously told Apple to shut down and give the money back to the shareholders back around '97. And then Steve Jobs returned and he harnessed the internet, and then he harnessed MP3 files and digital music in order to revive Apple, and then eventually created a crazy thing called the iPhone, and it became the most valuable company in the world. I think history is replete with examples, you know, whether it's the internet or whether it's AI chips, people wrote off GPUs as being irrelevant, and all of a sudden we have the ChatGPT moment. The Bitcoin miners were struggling, and then AI explodes, and now everybody wants their energy. I think that digital intelligence, digital assets, digital capital are creating the most compelling opportunities for corporations in the world today. I think the important thing is to use them the right way. For example, we used AI in order to design those 5 digital credit instruments. So people ask, how do you make $1 billion with AI? Well, we created $8 billion with AI just by designing new types of securities. Yesterday, STRC traded $175 million. It's the most successful preferred stock in the century, maybe ever in the history of the capital markets. It was designed completely with AI. It's 100 times better than a good preferred stock. I would encourage anybody with any corporation to think about how you turbocharge your company by using digital assets, digital currency, digital capital, or digital intelligence. there isn't a company that you can't improve using technology in the year 2025.
Michael, later on in the program, I'm going to be sitting down with Eric Trump and Asher Ganut. They're, of course, working American Bitcoin and Hut 8 mining those operations for American Bitcoin. And I know they're very focused on power generation. As you look at your long-term outlook for Bitcoin, other cryptocurrencies, how concerned are you that this country can't produce the power it needs to meet the demands of cryptocurrency?
You know, I think the company got a wake-up call. Back in 2020 and 2021, I talked to a lot of power companies and energy companies, and they were about to decommission all their nuclear reactors. We were staring at all the nuclear reactors getting decommissioned, and there was a movement to shut down nuclear energy in this country. And of course, in Germany, they shut them all down. From early 70s, 73, all the way till 2023, the nuclear industry was persona non grata, and it was politically incorrect. And I think the explosion of AI, and when people started using these AIs and realized they're actually quite useful and they're transformational, it created a reconsideration and a political shift in the United States. The Overton window shifted. And as soon as Google and Microsoft and Apple and Amazon realized they needed energy, nuclear became cool again. And we flipped from 50 years of not wanting to build power, whether it's nuclear or natural gas was out of favor too. People wanted to shut down natural gas. All of that changed in the past 2 years. And now the political sentiment in this country is we should develop natural gas, we should develop nuclear power. And of course, we're only about 1 to 2 years into that sentiment shift. But I have confidence that the United States is going to move from a laggard to a leader in the energy generation business, because now we see we need the energy to drive our cars, we need the energy to power up our robots, we need the energy to think 1 billion times faster, 1 billion times quicker, and we need the energy to defend our digital assets like the Bitcoin network. And the only thing that was lacking was the political will, and I think that has flipped 180 degrees. There's bipartisan consensus. There's not even a debate right now about whether we should generate more energy or build more power plants. 4 years ago, you couldn't have done it. And so I think we've been saved by the explosion of digital intelligence and digital assets in this country. It'll be good for the nation. It'll be good for the world.
Michael, obviously, you're a serious guy, right? We've talked a number of times. You think very deeply about all these issues. But then sometimes I look at your X account and I see you posting or reposting these various sort of digitally generated images, AI generated images of yourself. They're a lot of fun, right? Of you, we're showing one of you in a top hat, various Bitcoin paraphernalia, superheroes, et cetera. Like, you know, I'm just curious how you think about that. Is that, you know, is your Bitcoin, you know, advocacy, is there an element of shtick to it as well? Are you having a little fun with it? How do you think about all of that?
You know, when I was growing up, there were 3 channels on television, and they turned off the television, the signal at like 11 o'clock at night or midnight, and for 8 hours there was no programming. There was no internet. We didn't have, today, we have infinite free music, infinite free television, infinite streaming video, infinite free YouTube. You can get lost, fall in a TikTok hole, an Instagram hole. You can get on stream and Twitch. We have managed to manufacture infinite everything. It used to be you had to have money to get a newspaper or a magazine. And now, you can see we live in a world where we have, to say 1 million times more content would be probably an understatement. So the entire society is being inundated with information, and their attention span has shrunk. And so people just don't have an hour to listen to what you have to say. Sometimes they don't have a minute. Oftentimes I think, you know, should I say it in a podcast? Well, maybe someone will listen to it. Can I say it in 5 minutes? That might be too long. Can I say it in 30 seconds? sometimes I'll write a paragraph and you think, no, I don't have a paragraph. People will read the first sentence, and then I write the sentence and I think people aren't going to read to the end of the sentence. And so the thing you learn from social media is you need to get to the point. So how about tell me what you want to say in 1 second? And the cliche is a picture is worth 1,000 words. And so sometimes I don't give you 1,000 words because you would lose 99.9% of the audience. In fact, I would say you'd probably lose 99.99% of the audience if it took 1,000 words. Show me the picture, and that will go viral. And you're doing people a service to give them an idea that travels a million times faster, that is a million times easier to digest, because people just don't have time. They're busy. They're being inundated. And when you see those images, that is us communicating something cheerful, constructive, useful, perhaps profitable to someone. But you know, like if someone says, hey, I wrote a book on this, here's the book, do you want to read it? I mean, how many books can you read? You know, literally every book written in the history of the human race is available for free to you right now. Do you really want someone with a good idea to give you 250 pages and tell you to read it? Or do you just want them to boil it down to one sentence, one tagline, or one picture? Because I'm like, show me the picture. Okay, got it. Now I can move on with my life. Thank you.
You're making a lot of sense to me, Michael. Stay with us for a second. Let's bring in our social correspondent for the day, Yahoo Finance's Ali Canal, with some of what she's hearing from our online audience during this interview. Ali.
Yeah, well, Brian, Michael Saylor just talking about infinite content on social media, which is the perfect segue since we are talking and taking your questions on social media. Plenty of viewers chiming in, and starting off with a strong one here, Michael. First question, do you see Bitcoin catching up to and surpassing gold's market cap by 2035? What say you?
I do. I think we're in a Bitcoin. We're in the digital gold rush, and 2035 is the 0.99 year. That means that 99% of all the Bitcoin will have been mined in the year 2035. If you want Bitcoin, you need to get it between now and then, because the last 1% of Bitcoin comes out over 100 years. There's no doubt in my mind Bitcoin will be a larger asset class than gold by the year 2035.
And another social viewer wants to know, why should an investor buy strategy stock instead of a Bitcoin or spot ETF?
Yeah, if you don't want to take any counterparty risk, and if you have a long time horizon, then you should probably buy the Bitcoin because you can take custody and take it anywhere in the world. If you simply want the asset, you want it in a brokerage account, you should buy the ETF like IBIT. It's going to take you 10 seconds to do that. It's easy to borrow against it. If you're a believer and you want amplified exposure to digital capital, and also if you believe in digital credit, like our mission at Strategy is we want to give 1 billion people a bank account that pays them 10% tax deferred. If you think that's a cool idea to give someone in Japan or Europe or Switzerland or New York City a bank account that pays them 10% with no volatility, and if you think that Bitcoin can power that, then you're buying our stock because we're a digital credit factory. And if you want to outperform Bitcoin and you're ready to get on the roller coaster, you should buy the equity. But if your time horizon is less than 4 years, if you need the money back in 4 weeks or 4 months, then you probably want something principal protected. You want low volatility. You should buy a credit instrument. Like STRC is literally designed to get the vol, down. Right now it's 7, whereas Bitcoin's vol is 45 and Strategy's vol is 65. And if you want something that's going to be extremely low vol, you should buy a credit instrument like a treasury credit product like STRC. You'll outperform your money market. You might very well do as good as the S&P index, but you'll be able to buy it and sell it and get your capital back, in a month, in a quarter, in a year, and you don't have to, worry about the roller coaster.
Let's start on Bitcoin, because we hit 126 all-time high in October. We're down about now 22% since then, John. Explain this move to us. What's going on here, and what do you think comes next, near intermediate term?
Well, in terms of short-term price movement, not to be trite, but more sellers than buyers, right? That's ultimately what happens. So I try not to, we as an exchange care about price discovery and efficient price discovery and value transfer, and not so much causality behind short-term movements. But I'll remind everyone that this is an asset that is up an extraordinary amount over the duration of its lifetime. Year on year, we're still looking at, haven't done the numbers yet, but probably looking at 35, 40% year on year return, even with the drawdown. The ability for an asset that has as much upside as Bitcoin to periodically have these types of price corrections or mean reversions, however you want to phrase it, it shouldn't be surprising. So throughout I think I've not been on your show, but all the shows I've been on during the bull run, the advice is the same. Dollar cost averaging into volatile assets is smart. If you believe in the thesis, buying at a discount in a consistent, sober, thoughtful way also seems smart.
Mark, let me get your thoughts. Same question about these moves we're seeing. I should mention, so Bitcoin down 22% from that all-time. I'm just saying Ethereum's down 35%. Solana's been cut in half. What do you think?
Well, I think one of the things that's been overlooked is the fact that back on October 10th, we had what was effectively a cataclysmic event for the crypto market that the mainstream may not have picked up on, but we had a flash crash. And in that crash, we saw about a quarter of the crypto market makers go out of business, which if you think about that, translate that to traditional finance, that's all you would hear about in the news. But as a result of that, we are seeing some healing that's going on with regard to the liquidity in the market. And at the same time, one of the big catalysts for crypto is the potential signing into law of the Clarity Act, which would create a regulatory framework for crypto. Well, the U.S. Senate was not going to be taking that up when there was a government shutdown going on. So you had a confluence of the larger macro with a crypto-specific event, and here we are, quite a bit lower than where we had been a month ago.
Dan, here's a simpler question, but honestly, it's a question I will get from friends and family. They'll say, what is Bitcoin? What is its point and purpose? One school of thought, I've had guests on the show who say, don't overthink this. It's digital gold. It's just a hedge against fiscal irresponsibility here and abroad. Is that how you see it?
I view this more as obviously, I think it's more of a risk asset than most people give it credit for.
Why do you say that, Dan?
Because it trades down a lot when markets are volatile, right? So I think those movements, that volatility, you see something that trades down or up so much, so quickly, and it's gone up so quickly over such a short period of time, that to me is the epitome of a risk asset, more than people give it credit for. That being said, it's a VIX on the NASDAQ. If you think about it like that and you don't overthink it, if you believe that we're headed to a great place and we have our sort of official price target for Bitcoin and it's going up, then it should outperform.
What is that official price target?
I think when we cover MicroStrategy, so we have to have an official price target. I think we're close to 150 by 2027. That's kind of when we published our note on MicroStrategy. That was our sort of official stance of where it's headed towards.
John, here's a question that came up today at Invest. Will Bitcoin ever be as big as the gold market? We talked to Michael Saylor. You might not be surprised that Mr. Saylor says yes. Here's what he says. He says Bitcoin will be a larger asset class than gold. Puts a year on by the year 2035. What's your reaction to Mr. Saylor?
So he's a very smart guy. And I read his analysis of why that would be the case. He's tying it to the virtual end of Bitcoin production. And the fact it will take 100 years to produce that the incremental 1%. He's not wrong that in terms of, if you look at other assets that are priced by the marginal unit of production, like say crude oil or natural gas, it's not uncommon for those assets to spike up when that marginal unit of production gets more scarce. So if that extra barrel of crude oil coming out of the ground is bid after, then crude oil prices will go up, regardless if there's 1 trillion gallons under the ground. So his analysis is thematically reasonable. Hard to tell what's going to happen, but I view Bitcoin as complementary to, as opposed to a replacement asset for gold.
You own both.
I own both. I mean, in terms of the look, long-term inflationary hedges are difficult to figure out, and most large investors have not figured them out. So you can dollar cost average the global economy over time. That would be some type of inflation hedge, or you can try to pick a basket of assets that you think will perform well. Most funds that have looked at that problem when they run the analysis, Bitcoin is a part of, maybe not the only asset, but a part of that asset. It incrementally helps inflation hedges over time because, again, it can be viewed as a hedge against money printing.
What's the risk? I'm listening to this.
Sure.
John, I hold Bitcoin. Yep. What's the risk it ever goes to zero?
If you think about the universe of things that would have to happen, what's the risk that the internet ceases to exist? What's the risk that the plumbing that interconnects us as a society goes away? So I hate to ever, I mean, look, crude oil went negative less than 2 years ago, right? The world's most important valued commodity. For a brief period of time, you had to pay someone to take it, right? So who would ever imagine that could happen? Obviously, it's not negative now. So markets can do really weird, crazy things. So I don't look at short-term price corrections when I think about the underlying thesis for why it should exist. The computational complexity that represents Bitcoin at this point, to unwind that completely, as well as the hundreds of millions of people who believe in it, is it possible, perhaps? Is it likely? No.
Mark, let's give people some investment ideas. All right, here's three as we head into 2026. You're telling clients, got three here, correct me if I'm wrong, Galaxy, Hut 8, and Strategy.
Yes.
Is there a theme or common themes that sort of join those together, Mark?
Well, with the first two, with Galaxy Digital and Hut 8, these are hybrid firms. Galaxy Digital is actually our top pick in the space, and that's because it provides two ways to win. The company's base, what it has built since its founding, has been an institutional platform focused on crypto. They're basically trying to build a merchant bank a la Goldman Sachs around crypto, and they've been able to get a significant first mover advantage as a consequence of that. So as we see institutional adoption of crypto increase, with the Clarity Act being a near-term positive catalyst in that regard, that business should do very well, as should the institutional platform at Coinbase. At the same time, Galaxy Digital, by virtue of buying a Bitcoin mining plant in Texas, back in December of 2022, when we had just seen the FTX collapse and people were thinking this was the end of crypto, they bought this facility for Bitcoin mining. As it turns out, it was convertible into an AI data center. And so now the company is sitting on 3.5 gigawatts of capacity in Texas. It's already signed contracts for the first 800 megawatts with CoreWeave. And the value of that, according to our sum of the parts, is, at least at this point, greater than the value of the institutional platform. But you put the two together, and there's an awful lot of upside. Again, a couple of different shots on goal.
Dan, those are Mark's picks. When clients are asking you top ideas heading into 2026, what are you telling them?
Robinhood is kind of I like two names very much, and there's another name that I want to mention here as well. So Robinhood is kind of your quintessential killer app, right? I know the price has been up a lot, but I think you just had Vlad on TV here for a long interview before that. They're just a machine. They're going after a $600 billion plus TAM. Today, they're less than 0.5% of that TAM, and they're going to 10x the company. So that means this could be like a $30 billion revenue company in a few years, not that far along. I also love Affirm.
Why do you love Affirm? We had Max on as well.
How could you not love Affirm? I love my wife, and I love Affirm as well. Don't get me wrong. My wife and my kids, and then Affirm, in that order. But
why is Affirm a buy here? Strong buy.
Because the TAM, the total addressable market for Affirm, is literally unlimited. What I mean by unlimited, it's basically all of credit, and they're offering a way for young people, and not necessarily poor people, but young people that don't like credit cards, don't like to revolve credit, to basically take a loan, like pay as you go, right? And I do also want to mention eToro, which we feel like is an inflection point, right? The moat of eToro is much stronger. The valuation is a fraction of what Robinhood is. And you saw in this quarter that they reported, it's starting to gain momentum. So I think that's kind of the value play in the, let's call it like high valuation stocks.
I saw, Dan, I just want to ask you, I think I only saw one sell in your coverage universe. Correct me if I'm wrong. but I think there's only one underperform. Is that Circle?
Yeah.
Why is, and I know sometimes you have sells, maybe sometimes you do, yeah. Sometimes you have strong sells. Is this a pound the table sell?
This is like a sell with a vengeance.
With passion?
Yeah, with
All right,
passion.
why the passion on Circle?
We initiated, it's actually good, I'm very glad you asked this, but we initiated, I was just looking at it today. The stock was at $207 and everyone was drinking the Kool-Aid, the stablecoin Kool-Aid, and we're like, it's not worth that much. It's a great company, but it's not worth $207. We put an $84 price target, and if you look at it today, it's actually, touching our price target, back and forth. Rates are coming down. Their circulation is not going up much more beyond, like sequentially the circulation of USDC is like in the mid 70s. And they have to pay more and more for partners like, our esteemed partners here at Coinbase and others in order to get the stable coin. So it's like a buyer's market, not a seller's market. So we still think there's obviously like more bad news to come on that front, and we're pressing the sell on that one.
John, let me ask you this, because we were talking about catalysts for crypto. What are risk crypto investors you think have to think about broadly in 2026? Is it leverage, John, regulation, custody risk? What should I have on my radar?
So the macro thesis, quite frankly, looks good. I mean, I know the price action recently hasn't been great, but we're looking at massive regulatory unlocks. Under the radar was a recent IRS unlock, where the IRS came out and provided real clarity on tax issues around crypto, which I think was a underserved point. We've got massive increase in institutional adoption, Coinbase's announcement of Citi partnership, JP Morgan using. So I think there's going to be periods of peaks and valleys, ultimately. So again, the idea of trying to time the market, I think, would be the biggest risk. Because a sober dollar cost averaging approach, given the regulatory unlocks, given the increased institutional growth, seems smart. But I think, to answer your question fully, I think market timing and avoiding trying to market time would probably be the biggest risk.
John, you might have line of sight here. Who owns Bitcoin right now? I mean, is it Josh? Is it institutions? Do we have a good, know what the breakdown is?
So there are charts floating around. Depending on whether you view BlackRock as a single institutional owner, which I don't, because their sales come through people buying via the ETF. You'll see numbers saying that the majority of Bitcoin is now institutionally owned. There's been recent selling from large old owners of Bitcoin. So I think the general thesis is it's moving more institutional, but again, you have to unpack the nuance of that. The ETFs have been extraordinarily popular. And so I view ETF as retail ownership, even though it's coming through an institutional wrapper. So I think we're looking at about roughly 50% ownership of institutional versus retail.
Mark, I'll end with you. Obviously, no surprise, one big theme we're talking about today, all things AI. When clients ask you, Mark, help us understand how AI and crypto intersect now and looking ahead. How do you explain that to them?
Yeah, well, I just gave one example with Galaxy Digital. Another is Hut 8, which is a company which has had as its basis Bitcoin mining, and then was able to evolve into a hybrid company that also had AI data centers. What is the common denominator there? Energy. It's the energy underlying this, which is really the key underlying theme, that if you can harness that energy, collect energy-related assets, then those can be allocated to Bitcoin mining, to AI training of large language models, or whatever the next technology is that comes along. So I think that as it pertains to AI, and I'd say this for crypto as well, you really have to be open-minded and flexible at this point because we're so early. Even crypto, we just had the 17th anniversary of the release of the Bitcoin white paper. Bitcoin is not even an adult yet. It's still a teenager. We act like we're in this next stage of institutional adoption when really we're in a very nascent period. With regard to AI, yes, there were folks who were talking about AI a few years ago, but not like now, not with the kind of intensity that we've been seeing. That's going to be going into directions that we cannot foresee at this point. So it really is important to be flexible, to follow the trends, and to be open-minded, and to find those common denominators, such as energy.
As one guest put it to me today, he thinks AI, we're not even in the early innings, we're still in the batting cage. There you go. Fellas, great discussion. Thank you so much. Appreciate it.
So this year has been an interesting one, to be sure, for Bitcoin and for cryptocurrency more broadly. But perhaps it's a bit surprising that we close out the year not with big gains, considering we hit new milestones of institutional adoption and new sort of regulatory and legislative support also. So how are you thinking about it as we close out the year, given that kind of support?
Yeah, I mean, I think Bitcoin is typically short-term volatile, and no difference here. I think the market is a little different now. There are more institutional buyers who are, slow and steady buyers. So there is this cycle where Bitcoin, goes through bull market and bear market phases. So I think there's a bit of speculation that could be the case, but there were some structural issues that caused the sell-off. Some exchange issues and macro news and high leverage, basically. So we're already about 15% off the lowest it got to a few weeks back. And, JP Morgan, for example, is calling for $170,000 in the next 6 to 12 months. Tom Lee from Stratfor is calling for $200,000, similar time frame. And there's a lot of institutional buying, which I think is it's very early stages so far.
I mean, some of those folks were calling for those kinds of price targets for the end of this year, and we haven't quite gotten there. But I mean, broadly, would you agree with those kinds of numbers that you see in here?
Well, I think it's very difficult to, predict timing, but I think people have short memories too, right? Recall the last cycle, we had a 69,000 top around this time, about 40% through the cycle. And people thought that was the top, but it put in a higher top much later in the cycle, right? So I think the timing within the cycle is getting over focus. So if people zoom out and consider that the timing is less accurate, and there are different buyers now. The ETF buyers are quite sticky. There's long-term investors. The Swiss National Bank buy MicroStrategy. Some of the Abu Dhabi sovereign wealth funds buying Bitcoin, some of the pension funds buying Bitcoin, and a number of banks, and investment companies like Fidelity calling a 1 to 5% allocation, Bank of America 2 to 4, and BlackRock 1 to 3. Were the first ones putting out a model price target, a model portfolio allocation. So I think those are, they're very interesting. They build comfort and support within the investor community. But those things take time to take effect, right? Because the banks have to go through trainings programs, get their salespeople the information. So I think that continues to come through in the next few years.
Adam, as somebody who was around, at the inception of Bitcoin, is this how you thought it would play out? I mean, I know that earlier in its sort of development, there was more talk about it being used for transactions, and it sort of evolved to be more of a store of value. Did you think it would play out that way?
Well, it's pretty interesting to see it develop over the years. And I guess a broad analogy would be the internet. So the internet originally was kind of counterculture. There were, very, very small percentage of the population on the internet, then it became mass market. Then all major companies had internet, their web pages, internet services, smartphone apps. It just continues, right? And so I think ultimately the, investors are going to want to invest in the adoption of Bitcoin by users. So it's the kind of secondary effect. And I think the other thing to bear in mind is that while there are large amounts of retail payments in Bitcoin, primarily in emerging markets, where they're less, there's more underbank situation, that it delivers a lot more to price formation if 1,000 users invest $10,000 to $100,000, then if 1 million users flow rapid transactions through, there's much higher velocity, and the merchants tend to convert to dollars or euros on the way out. So I think for the time being, the investment case is driving, the digital gold and unseizable global money is driving the price formation.
And when we look at the different ways that people have cooked up to invest in Bitcoin, I mean, I know that you're involved with a Bitcoin treasury company, but I think of strategies sort of most notably in terms of the amount that it holds. Is that really the most effective way for people to get access? Or, you know, for most people, if they're going to invest in crypto, does it make more sense for them to invest directly?
Definitely nothing wrong with investing directly. And you think about the Bitcoin treasury companies as a kind of Bitcoin derivative, you know, so there are sort of 1.5 and 2 times long Bitcoin ETFs. It has a different risk profile to that. And I think, you know, the answer for the treasury companies, some people say, oh, they're accumulating a lot of Bitcoin. I think the answer there is buy more yourself. You know, effectively, it's taken a while for other companies, other public market companies to follow Michael Saylor in a treasury play, but there's been a lot of activity this year, and some big established companies, you know, Tesla and so on, also have sizable Bitcoin positions. So I think ultimately all companies become Bitcoin treasury companies to some degree because it's an inflation hedge in a sort of longer time frame.
Well, that partially answers my next question, Adam, which is how do you see the evolution of the cryptocurrency ecosystem if you look 5 years from now, 10 years from now?
Yeah, I mean, I think, you know, having experienced the previous 5 and 10 years, things have moved much, you know, in the short term, people don't see the speed of development. But if you go back 5 years, it's, you know, it's pretty surprising where we are. If you go back 10 years, you wouldn't have expected at that time all of the major banks to be vying to provide Bitcoin-related products and services, making model portfolio recommendations, sovereign wealth funds, buying Bitcoin, pension funds, all of these things. And there's been a lot of regulatory improvement over this past year as well in terms of the types of banks that are now able to be custodians. So I think that opens the gate for people. Mm-hmm. And coming back to the MicroStrategy question, I think there are sort of mandate questions where some types of managed funds can only invest in shares, so they can't invest in Bitcoin the asset or Bitcoin ETFs just because of their mandate, right? So, and there are also tax arbitrage advantages for treasury companies. So, you know, in Japan, that's particularly the case for Metaplanet. Some countries were buying MicroStrategy shares because they weren't able to hold Bitcoin ETFs in a tax advantage retirement account, for example, so they buy MicroStrategy. I think the thing to bear in mind with treasury companies, got more volatility, but they are working for you. They're increasing the Bitcoin per share over time. So if you can establish a good entry point, you can hold that for long term, and it can obviously, you know, the hope there is it outperforms an ETF.
Adam, we have to leave it there. Thank you so much. Appreciate it. Bitcoin trading around the $85,000 level and the weakness rippling across stocks tied to the industry. MicroStrategy, Coinbase, Robinhood, all closing sharply lower. Joining me now is Owen Lau, Clear Street Managing Director and Senior Analyst. And we were just talking in the break how significant this slide in Bitcoin is. We're now down 9% since the start of the year. What do you attribute this slide to?
Yeah, there are a couple of reasons. So let's go back to October 10th. So there was a massive liquidation in the crypto space. The amount was about $19 billion. And then since then, the liquidity has dropped quite dramatically. If you talk about today's move, I would attribute that to 3 key reasons. Number one, it's Bank of Japan signaled that there may be interest rate hike this month. The second one is there was a hack on a DeFi platform earlier today. The third one is there was a conversation about, you know, the Operation Choke Point 2.0 that could be coming back. So that all aggregate into maybe it kind of magnified the auto deleveraging problem. We saw that back in October 10th.
And it just speaks to how interconnected crypto is, all the different currencies. You have these companies that also are very exposed to crypto struggling today. And I know you're bullish on names like Coinbase and some of those other players, but when you have so much volatility in the actual cryptocurrencies, how does that feed into sentiment versus fundamentals?
Yeah, so first of all, I want to mention that there is still a high correlation between the cryptocurrency and also crypto equity. So that's why I advise investors to look at these on a longer term basis. like that high correlation just shows that the immaturity of this asset class. But over time, I think that correlation could break. So to me, I would say investors should look at this on a longer term, maybe 3 or 5 or 10 years basis for the investment.
Because fundamentals could essentially go out the window if you have Bitcoin that has a drawdown of 20%.
Correct. To me, that's actually a buying opportunity because I went to like many conferences last month, for example, Money 2020, Ripple, and also Chainlink conferences. What I've been hearing is blockchain adoption continues. More and more TradFi companies are getting into this space and launch crypto products. So to me, the fundamentals are actually very strong, but we have to, but we have to play a longer-term game.
You have to be comfortable with the volatility that comes with riding the Bitcoin crypto wave at large. And what about the outflows in Bitcoin ETFs? Should that be a concern for investors? Because we've been hearing more and more that there's increased outflows there.
So that was part of the large liquidation we just talked about on October 10th. And when you see that large liquidation, some investors, if you don't have a longer term view and you start to lose money, they may try to stop loss, right? So one reaction they would take is to just sell the Bitcoin or other tokens. So that could cause a lot of the outflow. But again, if you look at these kind of names on a longer term basis, I would say longer term, the fundamental is still pretty strong.
So longer term fundamentals are so strong. What other catalysts are you looking at that will drive crypto hopefully higher in the future?
So one key catalyst we are looking at is regulatory clarity. So thank God we used to have the government shutdown and now government reopen. I think this is a prerequisite for the government, for the Congress to think about or come back to think about the market structure bill. In the House, they call it the Clarity Act, and in the Senate, they're developing their own market structure bill. My expectation is it could come back to the market earlier next year. That could be one key catalyst for the whole industry.
So you've been talking a lot about more crypto adoption, all the catalysts on the horizon. How should an everyday investor be positioned within the crypto market? Is it through direct exposure through some of these ETFs or maybe some of these crypto adjacent names?
Yeah. So I would say, first of all, think about from a capital allocation perspective. Don't just allocate 100% of your capital into crypto space. To me, the better or a good starting point is maybe you allocate 1% or 2% of your overall wealth to the crypto space and try some of these tokens or crypto equities first. And then once you feel more comfortable, you can start increasing that allocation to maybe about 5%.
And it obviously always depends on your risk tolerance and where you're at in your investing journey. One of the big themes in your research is blockchain for cross-border payments. How real is that shift and who could benefit most from something like this?
So based on our estimate, the TAM, it's about $40 trillion. When we talk about the cross-border B2B payment opportunity. So it is a big opportunity. But right now, there are many large companies are kind of occupying this space. But because blockchain can make the transaction faster, cheaper, global, and instant. So that's why it has an opportunity to disrupt this space. And again, this is a $40 trillion opportunity. This is huge.
All right, this is huge. We will have you back to see where things are. Hopefully, we've climbed back from some of these losses. But Owen, thank you so much for joining us today. I appreciate it.
Thanks a lot.
One of the biggest new names in the crypto space is American Bitcoin, backed by Eric Trump, Executive Vice President of the Trump Organization, and Hut 8 CEO Asher Ganoot. The business aims to make the U.S. a crypto mining superpower. Hut 8 specifically is also looking to capitalize on the intense energy use needed to power AI data centers. I have been really looking forward to this chat and invest all day long. I'm here with both Eric Trump, co-founder and chief strategy officer of American Bitcoin, and Asher Ganoot, executive chairman, to talk about the business behind Bitcoin and where this is all going. Good to see both of you, gents. Eric, coming right to you out of the gate here. You are the ultimate hard investment guy, building world-class properties, golf courses around the world. Explain to us where does the passion come for Bitcoin?
Well, listen, it's the greatest hedge against hard assets. I really believe that with every aspect of my heart and soul, right? I mean, it's immediately liquid, it's global, it's transferable. You can transfer 24 hours a day, 7 days a week, instantaneously, hardly any fees. You can't do that with hotels. You can't do that with real estate. So I think it's the greatest hedge against what I do every single day, which is kind of the hard asset world. I think it's also a great hedge against inflation. It's a great hedge against corruption. It's a great hedge against poorly managed monetary systems around the world. And I think that's why you see this global influx to Bitcoin. I think it's become probably the greatest asset of our time. You see roughly 70% appreciation on average year over the last decade. Name an asset that's had that kind of appreciation. You just won't find it, Brian. So, and frankly, a lot of this for me personally, because we have a little bit of a political hat in my family, as you know better than anybody, comes out of getting canceled by banks over and over and over for doing absolutely nothing wrong. And I think cryptocurrency is going to be the future of finance. And I think blockchain solves a lot of kind of the weaponization of the banking industry that's affected so many, not only in this country, but around the world. And so I'm deeply passionate about it. American Bitcoin is going to do it better than anyone. I mean, we started the company just under 8 months ago. We're the 25th largest Bitcoin accumulator in the country right now, public at least, and we're climbing that ladder very, very quickly. So unbelievable things to come, and I'm incredibly proud of Asher and everything that we've created on this end.
Strong start for American Bitcoin, Eric. What's next for this company over the next 12 months? What is your product roadmap? And then even along the same lines, how in the world do you mine Bitcoin so cheaply?
We mine Bitcoin so cheaply because we've got cheap energy. And by the way, isn't it nice to be able to do that in the United States of America where we actually have favorable energy policy? We haven't had that for a very long time. You see it with oil and gas and everything else coming down to record lows right now. It's a beautiful thing to see. America has to lead the way. Energy cost is everything. Energy cost is directly correlated with GDP. The lower the energy you have, the higher your GDP, and that's what we want for this country. So we're doing it in West Texas using some of the lowest energy costs. Brian, we're mining Bitcoin for roughly 50 cents on the dollar to the average, to the spot price of BTC. Every single day, 24 hours a day, we're mining Bitcoin and we're adding it. And we believe this asset's going to be transformational. Listen, a little while ago, I looked at the exact price of Bitcoin 2 years ago from today. You know what it was? It was 36,500, and now it's sitting at 105, 104, bouncing around. It was up past 120 a month ago. Bitcoin has been one of the greatest assets of our time, and even now, as you see volatility, which you always see in cryptocurrency, because naturally a slightly higher vol, we're still 170, 180, 190% higher than we were at this exact date 2 years ago. And I think that speaks to the fact that everybody around the world wants it. Every Fortune 500 company is putting it on their balance sheet. Every family office is buying more and more. People are hoarding it. And this isn't just in the United States. This is all around the world. It's an incredibly exciting asset class. And I believe in Bitcoin with every aspect of my heart and soul.
Eric, you know everybody in this industry, of course. Earlier on, we kicked off our conference with Michael Saylor, a.k.a. the Bitcoin King. He really made a strong case that more companies need to have Bitcoin on their balance sheets. Do you have Bitcoin on the balance sheet of the Trump organization? And if not, why not?
We have a ton of it on the balance sheet. I'm incredibly proud of that. I've got a ton of it on my own personal balance sheet. And, and obviously I'm going all in terms of American Bitcoin. I mean, we're setting up the greatest Bitcoin company in America, listed on the NASDAQ, ABTC, using Hut 8's infrastructure. Asher is one of the best people in energy anywhere in the country, anywhere in the world. And we're mining it, as I said before, for roughly 50 cents on the dollar. There is no one doing it that's better than us. There's no one that's doing it with more passion than us. There's no one who's doing it quicker than us. Listen, we've been listed for under 3 months at this point. And every single day, it seems like we're passing another company. And these are major companies that you know about. And so we're climbing that ladder very, very quickly. And again, our success thus far is beyond incredible.
Asher, let me get you into this conversation. Just before you came on, we had Mark Palmer really make a strong bullish case for your company and what you're doing. For those not familiar, where is your infrastructure situated? And then day to day, what do your operations do?
We run sites all across North America. We have sites in Texas, we have sites in New York, we have sites across Alberta and across all of North America. Our sites are split up in power generation, so we own power plants, and also data center capacities. Data centers that power Bitcoin and the network that everyone relies on in order to securitize Bitcoin, the asset, and then also sites that we're building data centers for that are powering AI use cases as well. We're a believer at Hut that energy is the fuel that powers all future technologies, and we want to be in the center of technology and power.
Asher, you're building a pretty substantial site, I believe, in Louisiana. Do you have a tenant for that yet?
We have not announced the tenant for that yet, but as everyone knows, power is extremely scarce right now. It's a really large campus in Louisiana with near-term power. And so we'll share more about who's going to go there in short order, but we've already started moving ground, construction on the site, and building a lot of the electrical infrastructure.
Meta's nearby, Asher. Is it Meta? I have to ask.
We haven't shared who it is, and we will soon.
Fair enough. Look through, seen through your prism. We've been talking all day long about an AI bubble. Is that talk ridiculous?
I think in any large-scale wave and systematic shift, you're going to see building. And I think people are saying, how much money is going into this infrastructure? Our belief is AI is going to fundamentally change the way that we operate in the world, the way that normal people transact, how they transport themselves from location to location, how they work in the workplace, at home. And so we think AI is just at its beginning innings of its impact on the world and on society. And in order for that impact to happen, we need to build data centers to power that compute. And so the question is, are there too many data centers being built? Are there use cases already happening? People need to invest today for where the future is going. And so we think we're still at the beginning of that investment cycle and that integration into what AI is actually going to do for the average person.
Are there too many data centers being built?
We have not enough data centers being built. We need more power generation in the US, we need more transmission, and we need more data center capacity.
Eric, let me get back to you here. How do you see crypto changing the future of the financial services industry?
Well, first of all, I think it's going to onboard trillions of dollars into the U.S., right? That's happening every single day. No country wants their own home currency other than obviously the U.S. dollar. No one wants a euro. No one wants the pound. No one wants any of the Asian currencies. Guess what they want? They want the U.S. dollar, and so you have stable coins every day that are bringing trillions of dollars every year. That's bringing trillions of dollars onto American shores. You're going to see more and more of that happening. Second of all, the speed of finance is going to go up. There's not going to be waiting, 36 hours, 48 hours over the course of a weekend to be able to send out a wire transfer. That's going to become instantaneous. Fees are going to go down. Convenience is going to go massively up. So much of the blockchain technology is going to tokenize assets. We're seeing that every day. In fact, some of our buildings are being tokenized for the first time. And I think you're going to have this major shift to Bitcoin as truly the digital gold. I think you're seeing more and more money that will ultimately come out of gold, and you're going to see that ratio disproportionately shift into Bitcoin because it's been the single greatest asset that we've seen, and it solves a lot of the problems that physical gold has, including weight and transferability and so many other things, right? The ability to monetize, speed of monetization, and so again, you're going to see crypto literally change every aspect of our financial system, and it couldn't come quickly enough. I think we're wholly behind. The banks have been antiquated for too long. The banks have frankly been the monopolies that actually have been a disservice to ordinary people who don't have maybe the Trump last name and don't have a lot of zeros on their balance sheet, who get zero advantage and have been put at actually a massive disadvantage. And there's no question that every single day you see another widget popping up on your Amazon cart being able to transact in either Bitcoin or stablecoin. Crypto is here to stay. Crypto is the future of finance. And American Bitcoin, in terms of what we're doing, being able to mine it cheaper than virtually anyone, we are going to lead the way. We are going to lead the way, and America is going to lead the way, which makes me incredibly happy as a person who loves that flag right behind my shoulder.
Eric, the crypto industry it's still volatile, and look, we're right in the middle of the latest sell-off in Bitcoin. What do you think about this sell-off, and what do you tell your investors and contacts when prices do come off the highs like this?
I laugh. Honestly, Brian, I literally laugh because it's almost like not a serious question. Again, back to what I said before. Bitcoin exactly 2 years ago today was at 36,500. And what are we sitting at? 102, 103, 105. We're dancing in that region. It's up to, we were at, well over 120. So you had almost a 200% return in a 2-year period of time. And then people talk about the volatility of Bitcoin. Hey, I'll take that volatility. Give me more volatility if I can get more return. And I think that's how crypto people are wired. And if you can't handle volatility, stay out of cryptocurrency and don't bother. But go into treasuries where you're going to have zero volatility, and you're going to click away at 3% returns. Go have a great time doing that, and I'll see you in 10 years. Embrace volatility. Embrace the future. It's clearly happening. It's not just happening in the United States. It's happening globally, everywhere. I just spoke at a conference in Hong Kong. We had 25,000 people there watching Asher and I it's happening all over the earth, right? I mean, this is here to stay, and I'll take 200% returns in effectively a 2-year period of time, any time, and have to deal with a little volatility. Sign me up. That sounds like the greatest investment you could ever have.
Eric, when we talked, I believe maybe more than a month ago at Trump Tower, what I didn't appreciate was how fast sovereign wealth funds are moving into crypto. From your vantage point, what are they doing, and what are the actions they will likely take next year?
Yeah. Well, listen, I think they look around the world and they see, how unfair some of these countries are to their individuals. Look how many bad currencies you have out there. Look how many corrupt governments you have out there. Look at how many antiquated banking systems you have out there. It's almost developing countries almost need crypto more than the United States does, as crazy as that sounds, because it kind of cures all the problems that they have based on the fact that they don't have kind of modern financial systems. And so sovereign wealth funds are seeing that, and they're buying into it. I mean, I've had people who run major sovereign wealth funds tell me that they're taking, and most of them are governments, they're taking all the energy from certain cities in the middle of winter when they don't need to use it to cool their office buildings, commercial buildings, and using that to mine Bitcoin, right? And putting unthinkable amounts of money into cryptocurrencies. People understand that this is the future of finance, and they are embracingly wholeheartedly. And by the way, this is happening in the UAE. This is happening all over the Gulf regions, all over the Middle East. This is happening all across Israel. This is happening by certain countries in South America who are literally, adding it to their national stockpiles, most specifically Bitcoin. The passion for cryptocurrency and Bitcoin in Asia is off the charts. I mean, look at what Korea is doing right now. Look at what Hong Kong is doing right now. Look at how Vietnam is opening up right now. And so this is happening across the board. And as I said before, it's here to stay, and it is going to modernize every aspect of our financial system. It's going to make it cheaper, faster, substantially more transparent, and a hell of a lot fairer to the end user who's traditionally, and I hate to use this word, gotten screwed by the big banks, including yours truly, who was probably the most debanked person in American history for doing absolutely nothing wrong.
Ash, let me get back to you. I don't know if you saw this, but earlier this week, CoreWeave got dinged. Their outlook wasn't that great, in part because of a delay in building, I believe, a data center. As someone putting these things in the ground, how difficult is it to get up and running an AI data center, and how long does it take?
The timelines to build a data center historically have been 2 to 3 years. People are trying to build them in 12 months today. And you have to rethink how you build these assets. Instead of stick building on site, maybe you skid the design and you bring it so a lot of it happens in a factory. You have the labor to support you on site in order to run double shifts. And so in building the speed, I think at Hut 8, what we're really grateful for is we used to build data centers for Bitcoin in less than 6 months. And so the infrastructure stack is more complicated, but we have this mentality and this ethos in the company to build quickly, to think about how to innovate around the deployment of these assets. And so the first question a lot of these companies had is, can you sign a contract? The next question, which we're starting to hear, is, can you build and can you build it on time with the customer? And are you over-promising to them? Or are you able to actually deliver to them the schedules that you've aligned with? The other element in these large mega projects is a relationship between the customer and the developer, and making sure that everyone works in lockstep to make sure that answers are given on time so you can move at the speed that you need. And so across the board, I think expectations need to be set with investors, between partners, and then you can deliver projects on time and under budget.
Asher, your company gets high remarks for, I don't know how else to put it, but not taking or signing crap deals. I mean, I imagine you're getting a lot of calls to work with you in some capacity. Why is that so important at a moment like this when the AI industry is going through the roof?
We've had deals that we've walked away from and we could have announced and I think would have done well for our stock performance short term. But we believe in the value of power long term. We believe in the scarcity of that power, and we've seen that come to reality. From 6 months ago to today, you see demand continue to rise. Right now, it's peak demand. Everyone needs these assets, especially at these timelines, and we're seeing the deals get better and better. And I think we are very open and honest with customers on what type of deals we're looking for, why we think those are fair deals, and we will hold to that. And we don't need to announce a deal for the sake of the deal. We're investing in long-term assets. These are 15-year contracts, and we want to make sure whatever we sign today that we're happy about 5, 10, and 15 years from today as well.
Eric, let me get back to you here. How do you think the crypto industry will look different after President Trump's latest term? Of course, your dad.
Listen, Brian, I mean, I think you kind of parted the sea, right, when it came to crypto. You know, you had an administration in the past that was just anti-crypto, anti kind of progression of the financial industry, and they did everything they could to possibly stop it. My father's completely reversed course on that, and America's leading the way. What's happening is as America leads the way, as he parts the sea, everybody else is kind of following behind, right? So all the Asian countries, obviously all the Middle Eastern countries are all following behind. They're using America's framework as kind of the framework, you know, that will give crypto guide rails in all of their respective countries. And that allows everybody to embrace it in a way that has never happened before. It's kind of hard if America's sitting on the sidelines poo-pooing something for so many of these other smaller countries to embrace. Now they're fully embracing it because America is embracing it and America is leading the way. They want to follow us. You know, they've always wanted to follow us in just about everything we do. They're also following us in terms of this AI revolution. They're also following us in terms of, you know, so many of the kind of energy procurement things that we're working on, you know, as a country. And again, that's beautiful. So I think you're going to see the crypto industry massively change around the world. And I think it's going to be one of those things that's growing so quickly right now, you can't stop it. There's no one that's going to turn the ship at this point, and certainly not in a 3-year period of time, you know, when it only progresses even further. And this is the new standard. America's going to be very proud of it. America's going to lead the way in it, and I think Donald Trump has a very big role in that, because this was not happening 9 months ago under the last administration. In fact, the exact opposite was happening. Crypto companies were leaving the United States. They weren't fleeing to the United States.
Eric, of course, we're having this conversation a day after the government shutdown ended. And look, we could talk about who's right and who's wrong, whatever the case. You know, I've talked to a lot of CEOs here today, and they're frustrated. You know, they want to keep running their businesses and planning and driving corporate profits. Like, how do these shutdowns eventually end, or is this just something we're going to have to deal with?
Hey, I'm frustrated. But believe me, it affects me too. I'm frustrated. You had every single Republican voting to open up the government, and you had Democrats, because they have no platform, they've got no message, they've got no leadership, and they've lost horribly badly for the last 5-year period of time, doing anything they can to be absolute obstructionists. And it is sad. These are people's lives. This is the GDP of the United States of America. I walked through Charlotte Airport, 2 days ago, Brian, and it was a nightmare. I'm watching kids fall asleep on their mom's lap as they're sitting on a floor because the terminal's so busy from delayed flights and everything else. It's not right. It's not right that air traffic controllers can't get paid, people who work their butts off and provide a great service to this country. None of this is right. None of it's fun. And then I get to watch AOC out there, talking about how she would have kept it, closed indefinitely if it was up to her, and how dare Chuck Schumer actually have the gall to try and reopen, the greatest economy anywhere in the world. These are not serious people. They're not the Ashers of the world. They're not the me's of the world. These are not serious people. They don't have to live with the ramifications of what they do. They're just willing to obstruct Donald Trump at every single turn, and our country deserves a lot better than that. So I feel for those CEOs, and I'm one of them. I agree with them 100%. Let us do what we do best as entrepreneurs and capitalists in the United States of America, and no one stands a chance.
Eric, do you see yourself running for the presidency at some point?
Brian, it's a terrible profession. I can tell you that much. I've seen the best parts of it. I've seen the worst parts of it. I can tell you, I don't wish the worst parts on your worst enemy. We were the most attacked family in history. We were the most debanked family in history. Never for doing anything wrong, just because they wanted to try and take us out. In fact, I just wrote a book about it called Under Siege, and that's what they did. They put us under siege. They put our nation under siege. I became the most subpoenaed person in American history, again, having never gotten a speeding ticket in my life, because they wanted to try and get to my father, and they wanted to try and take out our family and silence our family and gag our family. That's a long way of saying, I hope I probably never have to. It was so bad, and I had the right voice at the time, and I understood the trials and tribulations of our nation. I think I certainly could. But again, I've seen the worst of it. I've certainly seen the beauty of it. You can do great things. You saw that with my father in Middle East peace. This is something the Democrats could have never done. This is something Joe Biden could have never done. So there's beautiful things that come out of it, but at the same time, it's a rough world, and you better have a family that's prepared, and you better have the fortitude to go in there and go to war every single day, as my father has done for the last 10 years.
Asher, let me get one more word to you before we wrap this conversation. For investors that are investing in your company, or for folks that want to put money to work in a Hut 8, 2026, what is your big initiative, and what does success look like?
Continue to build data centers, powered infrastructure, continue to support American Bitcoin and their growth on Bitcoin mining, continue to support all of our AI customers. You'll see us build generation around data center capacity, both of all kinds of compute, from AI compute to Bitcoin compute. And so Hut 8 is a company if you're long energy. American Bitcoin is a company if you're long Bitcoin.
Well, good luck on the road ahead. Eric Trump, Asher Ganu, good to see you guys again. I greatly appreciate you coming. Thank you, guys.
Thank you.
Thanks, Brian.
What happens when you stack leverage on top of leverage in the crypto market? In a nutshell, well, that is the simple question that we're seeking to answer on today's Stocks in Translation, which has some slightly complicated answers. So as we dig into the shadowy world of leverage ETFs, buckle up, but we're going to guide you along step by step. So let's begin with a chart to illustrate how leverage can hurt on the way down. Here we have iShares Bitcoin, IBIT, as our Bitcoin proxy, and we also have Strategy. That's over the course of this entire year. Because of its huge Bitcoin reserve, which it funds with sales of stocks and other securities, Strategy has become a high-octane bet on Bitcoin. And if you look closely, you can see that Bitcoin peaked in October, but Strategy peaked long before that in July, and it's down 65% from there. And while our Bitcoin ETF is down about 5% year to date, Strategy is off closer to 40%. Now let's add one more layer of octane. We're going to take MSTR versus its 2x cousin, and this is Defiance Daily Target 2x Long ETF, ticker MSTX, and there are others. I'll break down leverage ETFs in a minute, but all you need to notice here is that if MSTR looks bad, its leverage version looks absolutely brutal in downturns. Leverage bets on Strategy are down over 80% this year alone, with $1.5 billion in assets evaporating recently. So what exactly are people buying here? Leverage ETFs are exchange-traded funds built to track 2 times or 3 times the daily moves of a stock or an index using swaps or options. The key word here is daily. These funds are reset every single day. They're not promising 2 or 3 times the return of a stock over 6 months or a year. They're aiming for 2 or 3 times whatever happens between today's close and tomorrow's close. And that's where the trouble starts for many. Let's run through some of the pros first, because there are legit uses for these funds. Leverage ETFs can amplify short-term views. If you think a stock is going to pop over the next few days, you can use less cash to make that bet. And they can be very useful to experienced traders who understand the toolkit and they watch their positions closely. But on the flip side, these funds track daily, not long-term returns. That means that the path matters as much as the destination. Big up and down swings, they can erode gains over time, even if the stock eventually gets back to where it started. They're not designed as buy and hold investments. So if you hold them through a lot of volatility, the math, it can work against you very quickly. So where does that leave us? Here's what to keep an eye on. First, pay attention to Bitcoin price and volatility. These products live and die on big daily moves. If crypto volatility stays elevated, the math inside leverage funds stays a bit rough. Second, for MSTR, the pros watch what's called the premium or the discount to its Bitcoin stash. You don't necessarily need to understand it if you can read a chart of MSTR and Bitcoin itself. Just ask yourself, is MSTR leading or is it lagging Bitcoin, and in which direction? Study the charts of what's happened historically. Third, you can watch Bitcoin and related ETF flows. If money starts rushing back into plain vanilla Bitcoin products, that could take off some of the pressure from these leverage sideshows. If flows keep chasing leverage instead, the risk is going to remain elevated. Fourth is kind of big picture, but you might want to keep an eye out on new single stock leverage ETF launches. This is where the systemic risk question lurks. Right now, these funds are still a small slice of the overall market, so they probably aren't an immediate threat to market integrity, as it's called. But as more single stock products launch on thinner, more volatile names, their footprint in the plumbing of the market, it grows. And that's something that investors and regulators are going to want to keep an eye on long term. Bottom line, leverage ETFs are powerful tools inside the right hands for short periods. They can do a specific job. In the wrong hands, over too much time, they can turn a plain vanilla loss into a life-changing wipeout.
Crypto exchange Kraken will be marking its 15th anniversary in 2026, making it the veritable granddaddy in this still young industry. The market has gotten a lot more crowded in that time and more established. With more on where the industry is going from here, we're joined by Arjun Sethi. He is Kraken co-CEO. Thanks for being here, Arjun.
Thanks for having me.
I do want to ask about price first, because there is some interesting price action today. We've seen Bitcoin fall below 100,000. How closely do you watch the prices, and how much is traffic on your platform correlated to the price of Bitcoin and other cryptocurrencies?
Yeah, just like any other asset, the more it goes up, there's speculation around it, so people get interested in it, and then they try to buy the asset. When it goes down, you tend to get a little bit more negative news, but that's across every asset class, crypto, ETFs, stocks, shares, et cetera.
So are you concerned at all that with that volatility that, that there is this drop in traffic, and how long do you think that this drop in crypto could last?
Yeah, so for our platform, we have over 400 plus crypto-related assets. We have all of the stocks and ETFs in the United States, as well as some international stocks that are going to be on the platform soon. So for us, it's across the board. One thing I think that's important is if you just look at the general slope of crypto, Bitcoin from 6,000 to 15,000 to 25, back to 8 to 50, back to 16, then 80, et cetera. You always have these curves that have continued to change for all asset classes. And I think what's much more important is what is the thesis behind why you'd want to buy Bitcoin or Ethereum or any of these assets versus hold a dollar or any other shares.
And do you think that sort of philosophy or reason for buying it, that is going to expand regardless of what happens to the price?
Yeah, there's going to be micro and macro cyclicalities across all jurisdictions. So the U.S. perspective is that we'll take a look at traditional markets, but we're in Australia, Canada, United States, UK, Greater Europe, et cetera, and then the rest of the world. All of these markets, in some cases, they don't have access to their own equities markets. So they're looking to buy assets that they consider safe. Most of the time, those assets are US assets. And crypto is one of those as well. So Bitcoin, Ethereum, the alts, Solana, et cetera, become sort of more synonymous with safety over time. And then the next phase of safety has been US Treasuries, which are stable coins, and then tokenized equities have been like a huge boon for us and other platforms as well, which is essentially similar to US Treasury as an asset that's safe. People want access to McDonald's, S&P 500, NVIDIA, et cetera. And I think that's great because you're leveraging the global liquidity, global access, global distribution through any global platform out there to be able to get access to these assets no matter where you are in the world, no matter what platform you use.
I do want to get more into tokenization, but first to kind of take a step back here for people who aren't as familiar perhaps with Kraken. You guys have a lot of traffic internationally as well. There are a lot of crypto platforms now. As I mentioned, you guys have been around for a long time, but there are a lot of crypto platforms that are accessible here in the US, and we're seeing an increasing number because existing platforms like a Robinhood, for example, has gotten more and more into crypto. So how should people think about Kraken? What is the identity of Kraken versus some of those other platforms?
Yeah, so I'd take a step back in that the TAM is large, right? The total addressable market around how to get people access to these financial products in the first place. So over time, you've seen a lot of these fintech companies just give broader access, underbanked. You have neobank services, et cetera, sort of converging on giving people access to any type of yield or savings. So the way to sort of think about it is you have all this open access. We talk about open internet, open banking, et cetera. Well, worldwide, that hasn't really happened that much. And so the first new movement worldwide in terms of distribution is mobile phone, access to internet, and now a global internet capital markets, which is essentially crypto. And then you're moving assets into that. And so we've been worldwide since day one. We've been fully remote since day one. So it just gives us access to a larger pool of customers. I think what has always made us different, frankly, is outside of core features is our culture. So what do we stand for? We stand for your property and your money is yours. It's your sovereign property, similar to how we think about our own freedoms and assets here in the United States. We want to be able to bring your assets, similar to how we think about crypto, is like it's interoperable. You can move it the way you want to. If you want to opt into a program that gives you a certain amount of yield, then you go to who you trust. And so we're vertically integrated in that way, which is we're an exchange like NASDAQ, and then we have an interactive broker-style platform for you to be able to use our products to be able to buy any of these assets that you want. And so crypto is where we started. Crypto native is how we were born. But those principles are what carries us for all the other products that we give access to. So, a lot of people talk about financial inclusion. I think of it more as how do we get more and more participants to get into the ecosystem. Crypto is the rails in the back end for us, and in some cases it's
freedom to do whatever you want with your money. But the ability to have freedom to do what you want with your money is to be able to have forward mobility in the first place. So at a time where we're talking about, how do I participate in the capital markets, we're talking about socialism in some cases, what do I actually get for my money and who are the services that I use? I think the traditional institutions are capped to high net worth individuals and larger folks that have pooled capital for better products. We want to bring all of those products to everyone worldwide.
You guys also have expanded more into the retail side. You bought a company called Ninja Trader earlier this year. Historically, you had been more a home for maybe professional traders. And again, this is an area that some of your competitors are getting into more. Coinbase, for example, is leaning more institutional now.
Mm-hmm.
So is that a threat for you guys? How do you think about that competition?
Yeah, I generally don't like the terms when people say retail or institutional. It's as if you're pitting people against each other. And so, what does the average consumer do when they're starting off, like as an entry point? What does someone do when they're, in their midlife of their career? And then what does a high net worth individual do? Like that's the aspiration for everyone, right? Like whatever your asset might be from your job where you get paid a salary plus a bonus and maybe equity depending on how you work. And so worldwide, these things are changing. And so the way in which we categorize our customers is that we started off with an exchange for active traders and professional traders worldwide. They eat the same, they think the same, they read the same, they were educated the same. Purchasing power parity is very similar worldwide. They're the basis and the strength of our liquidity, our global platform, our rails, and they just give us the ability to create all these products for consumers. And so, traditionally people will say retail, but I think of retail as like this transactional model of an individual. It's like, what do you care about? What do I care about? What will my kids care about? And so it's consumers on their journey, and then we build a separate set of products for them that are powered by our liquidity engine or Kraken exchange. And so the interface is different. So we have a app called Crack, which is for sending, receiving, and getting yield, similar to how someone who is a high net worth individual would get. So if you want a 5% yield, hopefully in the future 8 to 15% yield, instead of having millions of dollars to get access to that product, you can have $5,000 or even $1,000. And then for our institutions, what they really care about is custody, safety, security. So we offer a lot of these yield products. So the DATs that we all hear about in the public markets, we support them.
Digital asset treasuries.
That's right. The companies that want to buy and hold on their balance sheet Bitcoin or Ethereum or any alts, we support that too. And then there's these protocol companies that are listing their tokens, we support them as well. So this is not any different than banking and financial services and the institutions that we're used to. We are building institutional products, but they are supported by our customers in the first place. And we consider, as a part of our ethos, free and fair and level playing field. So a professional trader, a consumer, or an institution, when they come onto our platform, they're able to trade, store, save, get products all at equal access.
You mentioned tokenization a little bit, and I know you guys have a tokenized stock product outside of the US called X Stocks, right? How is that product doing, and do you have plans to bring it into the US? I mean, the sort of use case where it seems more logical outside of the US. So talk me through how you guys are thinking about that.
Sure. So similar to stablecoins, we built out our platform called X Stocks, where it's tokenized equities. It's permissionless. It's across multiple chains today. So Solana and ETH are the two main ones where we launched, and it's available worldwide, including most of Europe. It's not available in the United States yet, but we're hoping that changes over the next coming months to years. The way to think about it is, again, as I'd mentioned before, people want access, no matter where they are in the world, to what I call safe assets or growing assets. And it's either a hedge against inflation, or they want to be able to have forward mobility. So if you're a shopkeeper in Latin America and you want access to the S&P 500, you have access now. And if you want to get yields for it, you can do that as well. But I think what's more important is that there's global distribution of getting people onboarded into the U.S. capital ecosystem. What's really great is you have more people participating, you have more liquidity in the ecosystem, you have more owners worldwide that sort of think the same way we do here in terms of what our U.S. capital values are. And that ends up being really great. And so it has become one of our fastest growing products. I think we just passed 10 billion in transactional volume on a tokenless, permissionless platform. And it's not just available on Kraken, it's available on the Phantom Wallet, it's available on a Solana DEX in any of these markets. And so I think what's really great is, like, while we're creating our product, we don't also want to force people into a walled garden where they say you can only buy equities with us, you can only buy crypto with us. If you buy with us, you can move it to a wallet. If you want to buy from another wallet and bring it to us, you can, as long as our banking and financial services support what you want. That's what we're there to do in terms of their workflow.
I want to ask you about regulation, particularly here in the U.S., because Kraken's not available in every state, and not all of your services are available in every state, in part depending on particular coins that people.
We're available in all states but one.
All states but one. What's the one state where you're not available?
We're still not available in New York today.
New York, which is where we sit right now. So do you think that's going to change? And do you, as I said, even if you're available in all states, there are certain things that are not necessarily available in all states. Do I have that right?
No, we're available with 99.9% of all our products in all states.
Do you think New York's going to change? And do you think in general you're going to see more loosening of regulation here in the U.S.?
Yeah, I don't think it's about loosening of regulations. This is kind of the sort of the proverbial thought, is that if there's any change in the way in which regulations are structured, that you're not protecting the consumer, right? Consumer protection is at the, like trust, safety, and consumer protection has to be at the forefront. And this is very similar in Europe. And so a lot of the conversations people are having now are how many disclosures or, like the cigarette disclosures that you're going to get cancer, do you have for products that are actually meant to give people forward mobility? And I think a lot of the discussions we're having is, okay, well, what are the types of financial products that you can get out to people? And so in New York specifically, I can't speak to like what they're thinking, but in the United States, we had the Genius Act, which is around legitimizing one-to-one backed treasury yields into stable coins. And then the next phase is going to be what people call market structure, or the Clarity Act that passed the House, which is like what are the ways in which you can get financial products now through the exchanges into the United States. And so once that happens, I think what's going to be great is it'll be a flood of innovation, a flood of capital, a flood of products that can come in and actually start innovating with us, not just one or two companies.
Finally, I want to ask you, you might have seen the headline that Grayscale filed for its IPO today. There's been a lot of crypto IPOs this year. What are you guys waiting for?
Look, I think the best way to run a company is to be prudent and disciplined, first and foremost, and also who are your customers and who do you cater to? So we've got 3 large constituents, and what we want to be able to do is talk to them about we're financially sound. We know how to have our own risk management on how we run our company. We have enough capital on our balance sheet today as a private company, and that we don't race to the door as quickly as possible. The fear of missing out because everyone else is doing it. And so I think what's good about these companies coming out first is that they are educating the market on what's good and what's bad, what margin looks like, how do you make money, et cetera. I think for us, we're going to do it how we think about what public markets mean, in terms of access to capital or trust when our clients want it.
All right, thanks so much, Arjun. Appreciate it.
Thanks for having me.
Jonathan, how much of the hacking that's happening or the thefts that are happening are hacking of systems like that, exchanges, and how much of them are infiltration of individual wallets? And for the individuals, how do people better protect against that?
Yeah, so actually we saw the largest increase in unique victims and the largest increase in number of incidents on personal wallets as well. And so this is something that I think is really important for people who are engaging in cryptocurrency activity. And cryptocurrency activity is just shifting into the mainstream. And so we will continue to experience this as more and more personal wallets are created. So I think that one bit of context here that's important for the viewers is that this is going to be the case as there is just a lot more regular payments and use cases for personal wallets across the internet. And so this is something that is going to continue to increase. We're working a lot with the wallet providers to actually secure and protect against these types of attacks as well. So there is a way where personal wallets are becoming actually a lot better at detecting these types of hacks, but it is difficult to protect an individual user where you need to really provide the security for their activity on the blockchain, and each individual can't be a cybersecurity expert. But if you look at the total value stolen, we're still 80% on the larger services compared to 20%, which is being stolen from personal wallets.
Gotcha. How much is AI playing into all of this on both sides, Jonathan? I mean, I've definitely seen that some of the recent hacks were powered by more sophisticated AI models getting into these wallets. But I imagine there's also defense that's powered by AI too.
Yeah, the place that I think AI plays a larger role than in the hacks side of this threat is actually on the scam side. And so really, if you think about the way in which people can lose money, you can either steal it from them or you can trick them into sending it to you. And actually AI is much better at tricking people into sending money to scammers, and those scammers can be very large organized crime groups too. But effectively, AI impersonation, AI, making believable statements, and giving someone the ability to translate into multiple different languages and approach victims anywhere in the world, that's something that AI is actually supercharging at the moment. And the only defense mechanism for that is to actually meet that with AI from the defending side. And so Chainalysis, we deploy AI agents at scale to actually collect intelligence from scammers that are attacking our population with the power of AI. And so you have this battle between an AI that can impersonate a victim and AI that can actually cause a victim harm. And that threat intelligence is being used across the industry to protect users against this type of scam activity. And very proud of the work that we've been doing over the past year for protecting consumers at scale globally against these types of threats.